Okay. Good afternoon, guys. Let's start. Today, full day will be accounts. Online, am I audible for everybody? Can you confirm? Those who are watching online, YouTube and Google Meet, confirm if I'm audible, visible, everything is clear. Perfect. Okay. Just 1 second. Why is this coming like this? Okay. So today's agenda will be, as we discussed, we'll do redemption of preference shares. We'll start off with that simple topic to start off. Then we also have to do redemption of debentures, and then dissolution we have two sums, relative capital method and one more sum in Gardner's-Murray rule. Those two sums, that's it. So target is to complete maximum possible here. This is what we do in accounts, and I will give you update on mock test that we are going to conduct plus marathon details. Just remind me today, it will just take 5 minutes. I have to update when is the marathon, when is the mock test. I have 2 dates in mind, or 3 dates: June 3rd, June 5th, June 6th. Which date do you prefer? Is good. June 3rd is Monday. Today is Thursday. June 3rd, June 5th is Wednesday, or June 6th. 5th. June 5th is the next mock date, or June ICA mock 2 is they are connecting ICA mock 2. Mock 3, 3 mocks they are connecting, is it? So third mock is starting on June 5th. So that day will be accounts. So that's why I'm asking, whichever works for you. 3rd, 5th or 7th. How many of you prefer 3rd form? Anyway, recording will be available. How many of you prefer 3rd marathon, which is Monday? 3rd, just type in the chat. Google Meet 3 now you type 3. 4 might be hard because 4 I'm busy. 5 now you type 5. 6 now you type 6. I'll just go with the majority. Meghana, if you're raising your hand, it's a little hard for me to get it. Just type in the chat. 7th no option hai kudukliye. Hemant. 3, 4, 6. Majority have chosen 6th. Okay, 5th nobody wants. Majority have picked 3rd, at least in Google Meet. So mostly we'll go with 3rd, guys. Okay, fine. I'll announce that in the break time or something. We'll make separate discussion. Let's start off with redemption of preference shares. Another important topic for exam. Again, inter topic. Hi guys. Now we're going to discuss redemption of preference shares, another new addition in CA Foundation, new syllabus for accounts. Fairly easy topic and scoring topic for us in exam. What is the entry for issue of equity shares? Bank account debit to equity share capital, correct, but to equity share capital. What is the entry for issue of preference shares? Bank account debit to preference share capital, correct? This is the entry for issue. Section 55 of the Companies Act talks about issue and redemption of preference shares. Now, Act says preference shares have to be repaid within 20 years, meaning equity shares once I issue, I can keep it for lifelong. If I want, I can repay. See, debentures now I have to repay. Loan I have to repay. Equity shares should I repay? No need. But preference shares I have to repay. Are you understanding, guys? Preference shares should be repaid within 20 years. So if I issued preference shares in the year 2000, by 2020 I should have repaid. Are you understanding? So in this chapter, we are not passing entry for issue. Are you getting it, guys? Issue is already passed in different chapter at different time. 20 years back issue பண்ணிருக்காங்க. அதை நான் repay பண்றேன். Okay. So if this was the entry for issue, what is the entry for repayment? Entry, can you guess? Excellent. Preference share capital account debit to bank. You're absolutely right. Spot on. So redemption of preference shares, we have only 4 entries, guys. How bonus I taught you 2 entries. Rights how many entries? Binayak. Rights no entry. Rights where I taught you entry. No entry. It's only computing theoretical X-rate price. Preference shares, there are 4 entries, guys. Okay. Now look at this carefully. I gave you these entries without the amount. Now let me give it with amount. Bank account to preference share capital. Let's say I'm issuing preference shares at par. Bank account debit 100 to preference shares 100. When I repay, will I repay 100? I can repay 100 or I can repay more. That means issue and redemption. Issue can happen at par. Issue can happen at premium. Discount is not allowed. Correct. Issue of shares at discount is not allowed. Redemption also can happen at par, premium, or even discount. Are you understanding, guys? That means what entry you passed in issue is of no concern now. Because that we have in a issue separate chapter. While redeeming, I can repay ஒரு 100 ரூபா share, I can repay by giving 100, or I can repay by giving 120, or I can repay only 90. I am bothered only about passing entries for this part now. Are you understanding, guys? Clear? Following? So what is the first entry? Now let's take a scenario. Sir, 100 rupees share, sir, we are repaying it 120. Vechkonga mind. I am repaying it how much, guys? 120. So entry will be preference share capital account debit. First entry, guys. You can write template. In the chapter la irukradhe 4 entry da. For the 4 entries we have to compute amount. That's it. So first entry is preference share capital account debit to bank. You're right. But today I will announce the payment of preference shares. But will I repay today itself? I might pay after 1 week. So first I have to create a liability, then I will do payment. Correct? So I will do preference share capital account debit to preference shareholders account. Are you following? Are you understanding, guys? Next entry will be, entry number 2 will be, for now let's assume, I told you 100 rupees shares you are repaying at 120. For the time being, let us assume 100 rupees shares you are repaying 100. Easy sum, will not come in exam. So preference share capital account debit 100 to preference shareholders 100. My second entry will be preference shareholders account debit 100 to bank 100. That's it. 2 out of 4 entries done. Are you understanding, guys? So what is the first entry? Preference share capital to preference shareholders. Second entry, preference shareholders to bank. Are you understanding this part, guys? Let me slowly introduce the next adjustment. Sir, what instead of 100, if you are repaying 120, what to do? That means you are a preference shareholder. How much should I pay you? 120. So instead of 100 here, I will write 120. Here also instead of 100, I will write 120. Because my liability towards the preference shareholders is 120. Correct? But share capital in books is still 100. What to do with the difference 20? Are you following, guys? Are you understanding? Are you understanding there's a difference 20? That means I have to debit something else. For this 20, I have to debit something else. So my entry will be, this extra 20 is a loss for me or income for me? Where I have to pay you 100, I am repaying 120. So for shareholder, it's a gain. But I am doing accounting in company books. So for company, it's a loss. What is it? You just now told me, premium. So I will create one dummy temporary account called premium on redemption of preference shares account. Are you following, guys? So how is the first entry going to look like? Premium on redemption of preference shares account debit 20. Preference share capital account debit 100. To preference shareholders, the liability to pay you is 120. Second entry is preference shareholders to bank 120. Are you following these two entries? Shweta, you have a doubt? Correct. This one is if you're repaying it 120. What if you're repaying only 90? Instead of this, it will come on the other side. So let me write the discount entry. So first, if it's discount, preference share capital account debit is 100 only. Share capital is 100. But to preference shareholders account, I am going to pay you only 90. So I have a gain. So to discount on redemption 10. Next entry for payment will be preference shareholders account debit 90 to bank 90. Understood? Par means it's easy and the difference itself will not come, same as 100. But sums in the book discount they have not asked once also. You can copy the template. But exam what they ask? Premium. 99 out of 100 exam sums will be premium. Maybe if examiner suddenly wants to surprise you, he will give discount. We don't know which attempt will be surprise. Only after the attempt we will know. Okay. Following, guys, understanding Rishi. Which chapter are we in? Chapter name. Redemption of preference shares. Perfect. Redemption means what? Repayment. But you will use the term redemption. Okay. Following, guys. So first two entries done, sir. I understood. It's easy. What is that next two entries? Okay. Now very simple. Keep this aside for a moment. Normally, when you pay rent, what is the entry? 10 rupees rent. Rent account debit 10. To bank how much? After this, what you will do in the year ending? Year ending, this rent will be transferred where? P&L. Excellent. P&L account debit to rent 10. In my P&L debit side, I will write rent as 10. Correct? That means every expense should be transferred to my P&L account or I should transfer to my reserves. Correct? So, this debit, I am going back to the first base, this one, this debit, correct? I should transfer to my P&L or in other words, I should transfer to my reserves. That is my third entry. Transfer of premium on redemption to reserves. So, let me write the third entry will be reserves and surplus account debit to premium on redemption of preference shares. How much in our example it was? 20. This is the third entry. Sir, 3 out of 4 entries done, sir. Super. That's it. Are you getting the third entry, guys? Third entry. Hello. But which reserve you can debit? Can I debit any reserve of my choice? No. Write down. Note. Note. Only free reserves can be debited. Only free reserves can be debited. Are you following, guys? Which reserve? Free reserves. Sir, can I debit securities premium? For that, the answer is not a no. It's yes or no, depending upon this. I will tell you what to do for exam also. If company is following section 133 of Companies Act, which is nothing but accounting standards, then no, cannot use. If company is not following, so here it is, following accounting standards, not following accounting standards, then yes, can use. Are you following, guys? I'll explain the logic. But for exam, where question is silent, question is you cannot use. You should not use. Even in our study mat, they will not use. Because all the companies will follow what? Accounting standards. Why, sir, this logic? You will get the answer for this mainly in detail only in CA Inter in a topic called Accounting Standard 26. But if you are still curious, sir, I want to know, sir, why I can't use securities premium? Who gave me premium? Which shareholder? Generally, which shareholder will give? Equity shareholder. Equity shareholder kurta premium, how can I use for preference shareholder? I will again repeat. The premium given to me is given by equity shareholder. How can I use that premium for premium redemption of preference shareholders? Are you following, guys? See, when you pass the entry for issue of shares, bank account debit 120, to equity share capital 100, to securities premium 20 of this 20 was given to me by equity shareholders. How can you use this for redemption of preference shares? So we will not allow. That's what AS 26 says. AS 26 gives you in brief. Okay. Are you following, guys? In intangible assets, you will see about premium, little bit about intangible items. So in more than AS 26, section 52 actually, guys. Sorry, just correct it. Section 52, securities premium section tells this. Are you following? But if you go and ask anybody who's studying foundation, inter, final, qualified CA also, he will tell same thing. Securities premium following cannot use. Securities premium not following 133 you can use. Ask them why. They will tell, I don't know. Standard is saying, your institute is saying, that's it. Logic is very simple. Are you following, guys? Clear? Sir, then next I agree and ask, sir, what if that premium was given by preference shareholders? If question gives the data, we can use. Otherwise, if you are silent, you should not use. Sir, all this okay, sir. I understood logic. For exam, what is the third entry? Debit reserves and transfer it to. That premium should be transferred reserves. Reserves and surplus to premium or redemption of preference shares. Which reserve I can use? Only free reserves. Free reserves means what? General reserve or P&L account. Correct? General reserve or P&L account. That's it. Any other reserve can I use? No. Revaluation reserve? No. Capital reserve? No. No reserve should be used. Securities premium also, if question is silent in exam, don't use. That's it. Okay. Following, guys. Entry 3 over. Now we have to go to entry number 4. Entry number 4, you write it down so that your notebook is complete. But I will explain only after we finish one sum, because that's it. I need to explain the concept. Okay. For now, you write down entry 4 as free reserves account debit. You will not understand, guys. To CRR account. CRR stands for capital redemption reserve. CRR stands for capital redemption reserve. I will explain in some time. Capital redemption reserve. Done, guys. Explanation for this will take 20 to 30 minutes. If I go in detail, I will do it today, don't worry. But after we do a sum, take your material, redemption of preference shares. We will solve 1 or 2 sums first. Redemption of preference shares. Illustration. Yeah, illustration 1. How many sums are there totally? 10 sums. Quickly we will do all sums. I will not be solving all sums. I will read the question, go through the solution, we will jump to next one. Okay. Look at question 1, fairly easy. Exam don't expect, but let's quickly do it. Hinduja company had 5,008% redeemable preference shares of 100 each. That means what is the value of number of shares? 5,000 into 100, which is 5 lakhs. Fully paid up. The company decided to redeem these preference shares at par by issue of sufficient number of 10%, rupees 10 fully paid up shares at par. You are required to pass necessary journal entries. Okay. The company is, what is saying? The company decided to redeem these preference shares at par. So 5 lakhs I am repaying how much? 5 lakhs by the issue of sufficient number of equity shares of 10 each at par. That means what they are saying, look at this. In my balance sheet currently I have preference share capital 5 lakhs of. This I am cancelling and replacing with what? Equity share capital of 5 lakhs. That means I am issuing equity shares and repaying preference shares. Understood? So look at the entry, guys. Look at the first entry in the book. Don't solve this. Let's not waste time in class. We have to finish quickly. Look at the solution. Let's see if you understand. Whichever sum I tell you to solve, we will solve. Okay. So far everybody understood. Look at this. First entry. I am issuing equity shares. You know the entry for issuing equity shares. Bank account debit to equity share capital. Clear? How much? 5 lakhs. Now I am repaying preference shares. Preference shares repayment. How many entries I told you? 4 entries. Fourth entry I am yet to teach you. So it will not come always. It will come only when there is a specific case. I will tell you when that comes. Leave the fourth entry. Third entry will come only if there is premium. Premium is not there. This sum is par. So I will have only entry number 1 and 2. So entry 1 and 2. Look at this. 8% redeemable preference shares. 5 lakhs to preference shareholders. Preference shareholders to bank. 5 lakhs. Sum over. Quickly 15 seconds. Go through and see if you are understanding this. Understood? Easy, guys. You tell me, if you are the examiner, will you ask this in exam? No. So we will quickly go to illustration 2. Illustration 2 also is almost similar. They had 10,000, 10% redeemable preference shares of 100 each. That means it's how many lakhs, guys? 10 lakhs. The company decided to redeem these preference shares at par. Again par. They are redeeming at par by issue of sufficient number of equity shares of 10 each at 2 rupees premium. In the sum cum previous sum, what is the difference? Previous sum equity shares are issued at par. Here equity shares are issued at premium. So how many entries will come here? 1 entry for issuing equity shares, 2 entries for repayment of preference shares. Totally 3 entries. Look at this. Bank account debit 12 lakhs to equity share capital, 10 lakhs to securities premium, 2 lakhs. Repayment of preference shares is at par. So preference shareholders 10 lakhs, preference shareholders to bank 10 lakhs. Quickly go through the 3 entries, see if you are understanding. Rishi, understanding? If you are setting paper, will you keep this question? Yes, no. That. Sorry? See, that third entry, reserves and surplus, will come only if you are repaying at premium. Here I am repaying at par. So why will that entry come? It will not come. Are you following, guys? This entry is not even this chapter, first of all, first entry. It's issue of shares chapter, issue of shares at premium. Yes, doubt? No, they are not giving, okay, let me clarify. They are not giving equity shares to preference shareholders. No. I am separately issuing equity shares, collecting that money and giving that money to preference shareholders. For example, A, B, C, D. A and B could be my existing preference shareholders. I have to repay them 5 lakhs or 10 lakhs, illustration 1 and 2. I don't have that money. So newly for C and D I am issuing equity shares. They gave me how much? 5 lakhs or 10 lakhs. That money is given now to A and B. Are you understanding? So in my balance sheet, earlier I had preference share capital, that will go away, it will become 0, replaced by equity share capital 5 lakhs. Are you getting it? If your question is, sir, am I giving equity shares to preference shares? If I am giving like that, my entry will change. That time my entry will be preference share capital account debit 5 or 10 whatever to equity share capital. Are you following? This is not happening here. I am separately issuing equity shares, collecting that money and giving to preference shareholders. Following up? Yes, doubt? Clear? Okay. How do I know that? Because they are clearly saying by issuing sufficient number of equity shares of 10 at a premium, they are issuing shares, they are not converting. Okay. Illustration number 3. 3 also is one dummy sum, guys. Quickly we will do. G India has 9,000 10% redeemable preference shares of 10 each fully paid up. The company decided to redeem the preference shares at par by issuing sufficient number of equity shares of 9 each. Okay. So what is the number of preference shares? 9,000 into 10. How much, guys? 90,000. So I have to repay preference shares how much? 90,000. So if I have to repay preference shares 90,000, how much money I need? 90,000. How I will get this money? I will ask equity shareholders. Look at the same 3 entries. Bank account debit to equity share capital 90,000. Then preference shares redeemed. Same 2 entries. Quickly, I'll give you 10 seconds. Go through the solution. See if you're understanding in the class itself. We will finish this full chapter within the next 45 minutes. All sums. Yes. No. I am not. I am taking money from equity shareholders to give to preference shareholders. No. This is the capital is different. No, premium is different. See, that premium is account write-off. Here I don't have money, so I am issuing equity shares. That money is given to preference shareholders. Okay, come down. Question 4. We will come back to it in some time. Come to question number. I'll tell you which question to do. Yeah, question number 6, guys. 6, 5, 4, they are all exam questions. 4, 5, 6, they are all exam questions. Look at question number 6. Illustration 6. The following are the extracts of the balance sheet of ABC as of 31st of December. Okay. Share capital 40,000 equity shares of 10 each. So what's the total share capital? 4 lakhs. Preference shares is 1 lakh. Total share capital is 4 plus 1 lakh, 5 lakhs. I'm just doing the computation in my mind. They have given the details of reserves. Capital reserve. What to do with that? Nothing. Useless reserve for this problem. Securities premium 50,000. What to do? Nothing. We can't use. General reserve is 75. PNL is 35. The board of directors decided to redeem the preference shares at par, not premium again. By utilization of reserves, you are required to pass the necessary journal entries. In this, how many journals will come? Only first and second. Will premium entry come? No. So what is the first entry? Preference share capital account debit 1 lakh to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Correct? Those are the 2 entries. Look at this. Preference shareholders to preference share capital to preference shareholders 1 lakh. Preference shareholders to bank 1 lakh. Are you following the first 2 entries, guys? Everybody understanding? Clear? Okay. Third entry I am yet to explain. Just give me some time. I will explain that when the time comes. Okay, let me explain what is the last entry, the entry number 4 that you wrote, general reserve to CRR. You remember that, guys? Let me explain that as a fresh concept. So we have so far finished 4 out of 10 sums, illustration 1, 2, 3, illustration 6 except the last entry which I will explain now. Coming back to concept, detailed concept, why are we passing the 4th entry? What is the 4th entry? Free reserve to capital redemption reserve. Okay. Follow guys. Let's take one balance sheet where equity share capital is 100, preference share capital is 50, reserves and surplus is 200, bank loan is 300, creditors is 50. What's the balance sheet total? How much, guys? 700, correct? Fixed assets 400, stock 200, cash 100. Okay, let it be like this. Okay, 700, just random numbers. Now when you repay preference shares, let's say I am repaying preference shares of 50 at par, because all these sums so far they have repaid only at par, basic sums. So if you repay preference shares at 50, what will happen? Preference shares will become, cash will reduce by, I will be left with 50, my balance sheet new total will become 650, correct? Now you studied partnership accounts. In partnership accounts, whom will you, if company is closing down, dissolution, after selling all the assets, whom will I pay? First, whom I will pay? Liabilities only I will pay first. Okay, first I should pay liabilities, creditors, loan, creditors. Then only if I have some money, I will pay whom? Partners, correct? Same concept applies to company. If there's a company, if company is going to close down, if I am selling the assets, whatever cash I have left, first I should pay whom? Loan and creditors, then only I should pay shareholders. But what have I done here? I am paying whom first? Preference shareholders are getting paid first, and who's not getting paid? Loan and creditors. The bank manager is seeing, now I gave 300 rupees. You have not given me 3 rupees also. That preference shareholders fully you repaid. So bank manager is coming and saying, please repay my loan. Can I repay? If I have to repay him, I have how much cash? Only 50 left. Then I have to sell my assets. If I sell my assets to repay, I should better close my business. Correct? So who's not going to be happy about me repaying to preference shares? My liabilities, especially loan creditors, will not be happy. Correct? Correct? So what to do in this stage if they are not happy? Preference share is not a loan, it's a capital. It's part of your shareholders' funds. No, it's never a loan. Okay, if it's a loan, you will pay every year interest. On preference shares, do I pay every year interest? No. So preference share is not a loan. Loan means you have to pay every year interest. Debentures, interest, loan, interest. Preference shares, dividend is optional. I don't pay every year. It's part of my capital. But it's part of my capital where I have to repay in 20 years because Companies Act is asking me to repay in 20 years. Are you following? So now you are the company. Let's say this is balance sheet of, for example, let's say, Bini Limited. Okay. Binayak and Co. Bini Limited. Now Bini Limited is confused as to what to do. Because if Bini Limited repays preference shareholders, who's going to be angry? Liabilities. If he is not paying preference shares so that liabilities are happy, who will be angry now? Not preference shareholders, Companies Act will be angry. Government will come and sit on Binayak's head. Okay. So Binayak is now like a cat on the wall. He doesn't know which side to go. If he repays preference shares, liabilities will catch him. If he is not paying preference shares, government will catch him. He can't repay both. He is not having so much money. What to do? What should Binayak do? Make a fresh issue. That's what we saw in previous sums. Now, let's say we are not doing fresh issue. Now, previously when I did the 3 sums, Hayagrivan asked, sir, in the first 3 sums we did fresh issue of equity shares. How much we got? Plus 50. So plus 50 means 100 became 150. That 50 only I paid preference shares. So my cash was minus 50 and plus 50. So overall cash will still be 100. My balance sheet total will be 700. Now liabilities will be happy. Okay. Cash was before also 100. Now also 100. I am all right. That's what we did in all the previous sums of illustration 1, 2, 3, 4, 6. Correct? But that time, Hayagrivan asked a doubt. Sir, if I am equity shareholder, why will I give 50 to pay preference shareholders? He raised the doubt that time. Isn't that a valid doubt? If you are the preference shareholder, will you give money so that, if you are equity shareholder, will you give me money so I will repay preference shares? No. So, let's eliminate that option. What option? Issuing equity shares is not possible. Issuing equity shares is not possible. But I still have to repay preference shares and I have enough cash. 100 rupees is there. Why I need to issue equity shares? Only when money is not there I will issue. Now money is there, why to issue? So now Binayak sitting on the wall, he has to make the preference shareholders happy, make the government happy, make the liabilities happy, and he should also be happy. Very difficult to be happy, correct? What to do? What to do? So Binayak came with a solution. Imagine you are all the liabilities. I am Binayak, I am giving the solution. You should tell me if you are satisfied or not. Binayak is saying, see, reserves is how much? These are free reserves, correct? This free reserves belongs to whom? Company. Specifically whom in company? Shareholders. Which shareholders? Equity and preference. So Binayak is saying 200 is mine. Free reserves. I can do anything with the free reserves, correct? I can declare 200 dividend. This full 200, I can give it to my equity shares. I can give it back to my equity shareholders. Now, if I give that also to equity shareholders, my cash will further fall. Now, every liability has a corresponding asset. Now, this 200 over here, what is the corresponding asset? Is it cash? Can be anything. It can be cash, can be stock, can be fixed asset. So this 200 on the liability side has a corresponding asset, correct? Let it be any asset, but it belongs to my equity shareholders, which I can freely use, correct? Are you following, guys? Let's say tomorrow I declare a dividend of 100 rupees. How much dividend? My entry will be reserves and surplus account debit 100 to cash 100. What I am doing? Payment of dividend. Payment of dividend. So what will happen? Reserves instead of 200 will now become, cash will become 0. Now can the liabilities question me? No. Because I am using my profits and giving dividend to myself. Who are you to question? But they are going to be angry. Correct? So what I will do, I will tell my liabilities, see, if I wanted, I could have issued a dividend of 100. But I am not doing it because for me your happiness is important. I can't pay myself before I pay you. Repaying this preference shareholders and making it 0, so cash became 50, is not my choice. Government is on my head. Look at that. I can't do anything. But I will do one thing for your happiness. This 200 is freely available to use in the future. Correct? What I will do, from free reserves, I will transfer to CRR the same amount of preference shares which is reduced. Preference shares 50 became 0. So I will transfer, free reserves will now become 150 and CRR will become 50. Nothing is changing in the asset side. It remains the same. Reserve alone, I am breaking it as 150 and 50. Now what is happening? Now how much dividend I can give? Only 150. Before I could have given dividend of 200. Now I can give only 150. That means this 50 cannot be used for any purpose. When you transfer a reserve to capital redemption reserve, that reserve cannot be used freely for any purpose. So I am telling my liabilities, see, I have the ability to spend 200 for myself in the future, but I am reducing that ability from 200 to 150. That means 50 rupees what I can spend for myself, I cannot spend in the future. That means 50 rupees worth of assets will still be in the asset side. So be happy. I am reducing my ability to spend. It's like your parents told you, I will not give you more than 2000 rupees for your birthday. Okay. Your birthday is 3 months away in the future. Now you have with you 0 rupees cash. What you did one day, you went to your parents' room, from their wallet, you stole 500 rupees and you used. That your parents found out. You already spent. I spent off that 500, went to movie, ate popcorn and came. Now in the future, in your birthday, will your parents still give you 2000? How much they will give you? 1500. Because you spent it off now, my future spending is reduced. Correct? So, because I paid preference shareholders 50, which I should have paid only in the future, but I am paying now because law wants me to pay. My ability to spend in the future is 200 in reserves. I am bringing it down to 150, so I can spend only 150. That means this 50 in CRR cannot be spent. It will always be CRR till the end of the company. This free reserves can become 0. But CRR will always be 50 till end of the company. That means this equivalent asset will always be in the business till the company is closing down. If the company closes down, when you sell that asset, that 50 cash will be paid to whom first? Liabilities, loan and creditor. So I will tell them, see, this 50 is now saved till the end of the life of the company. You will be paid if the company closes down. Are you happy now? As a creditor, are you happy, guys? Are you understanding what we are doing? Why we are transferring 50? Because my 50 cash was reduced now, I am reserving my right to spend the 50 in the future. Are you getting it, guys? Now, same example, you will tell me now how much to transfer to CRR. Okay. Equity share capital 100, preference share capital 50, free reserves 100, loan 200. What's the balance sheet total? 450. Assume fixed assets is 200, current assets is 250. Okay. Example. Now, I am repaying preference shares. So, 50 became 250 became 200. How much I will transfer to CRR? 50. I am locking my ability to spend in the future. So, this 100 becomes 50. Okay. Now, same example, guys. Slight change. Okay. I repaid preference shares how much? 50. So, my cash from 250 became 200. Now, like the illustration 1, 2, 3, I am issuing equity shares of plus 50. So, my cash again became 250. Now, how much to transfer to CRR? 0. No need to transfer. Because my cash is still 250, my shareholders' funds is still 150. Earlier it was 150, now it became 150. Are you following, guys? Next, third scenario. If you are able to answer this, you are getting it correctly. Equity share capital 100, preference share capital 50, reserves and surplus 100, liabilities 100, total is 350, 350, fixed assets 200, current assets 150. Now follow very carefully. I am repaying preference shares. Preference shares became, so cash reduced 50, current cash is 100. Now I am doing a new issue of equity shares plus 20. So cash increased by 20, cash new is how much to transfer to CRR? If you get this correct, you got the concept. How much to transfer? How much, guys? I will transfer 30. Why I will transfer 30? Earlier my shareholders funds put together was 150. Now it is 120. Earlier my cash was 150. Now it became 120. So loss in cash for me now is 30. So I will save only 30. Are you following, guys? Reserve and surplus will become 70. Reserves will become 70. CRR will become 30. Sir, what if in this sum, new issue of equity shares is 500? How much will transfer to CRR? Nothing. Because my cash is increasing, not decreasing. My shareholders' funds is increasing. So for this, they gave a formula in the book. You wrote entry 4 in your template. There you write down below that note. Amount to be transferred to CRR is equal to. Now be very careful, guys. This entire example I taught you, follow, look at this, very, very important. This entire example I dealt with it as if preference shares are repaid only at face value of par. What if 50 rupees premium, 50 rupees preference shares I am repaying at 70? Are you following, guys? Ignore premium for the purpose of CRR. Meaning, premium repaid is not considered in shareholders' funds. You will still get the same answer. 50 rupees is the face value, you are repaying 70, my answer will remain the same. You will compute as if you repaid 50. So, for the purpose of CRR computation, consider only face value. Because that much only is the fall in shareholders' funds. So, look at this. Amount to be transferred to CRR is equal to face value of preference shares redeemed minus what, guys? Minus what? Face value of fresh issue of equity or preference shares. Write this as a note below journal number 4. So, amount to be transferred to CRR is what, guys? Face value of preference shares redeemed minus face value of fresh issue of equity shares or preference shares, if any. Now, go back to the very first, this illustration. In this illustration, the face value of preference shares redeemed was 50, fresh issue was 20, that's why you told transfer is 30. In one more scenario example, face value of redemption was 50, fresh issue was 0, so you still have 50 transfer. In one more sum I told you, face value redeemed was 50, fresh issue also 50, so transfer to CRR 0. Sir, what if redeemed is 50, fresh issue is 70, I am getting negative 20, nothing to do. That's why in illustration 1, 2, 3, if we go back and see illustration 1, 2, 3, in all the 3 illustrations, if you see, for example, in illustration 1, if you see, fresh issue is 5 lakhs, redemption is 5 lakhs. So, 5 lakhs minus 5 lakhs, how much for CRR? 0. Formula is enough for exam, but are you understanding the logic behind the formula, Vinayak? Okay. Yes. How will you not create an impact if you repay? 70. Shareholders' funds, no. The capital is falling only by 50. Premium is excess. That time what will happen? Your point is valid. Sir, what will happen if I repay? Let's take a sum like that. Then I'll explain in that sum. Now come back to which sum were we in? Illustration 6. In illustration 6, how much we repaid? 1 lakh. What is the fresh issue? In illustration 6, repaid is 1 lakh. What is the fresh issue? Fresh issue. Check. No fresh issue. So, how much to transfer to CRR? So, it will be 1 lakh minus 0. That's why third entry, you will transfer to CRR from what reserves I told you? Free reserves. That's why general reserve P&L account debit to CRR 1 lakh. Now, go through these 3 entries. See if you are understanding quickly. Done. Following, guys. Shweta, understood? Sure. Okay. Question number 7. Illustration 7. That's it. With this redemption of preference shares, concepts are done. We just have to practice sums. Easy or difficult? That's why I brought down from inter to foundation. Okay. Fine. C Limited had 3,000 12% preference shares of rupees 100 each. So what is the total preference shares? 3,000 into 100, which is 3 lakhs. The company had to redeem these shares at a premium of 10%. Came off premium. So far I was thinking easy, sir. No, premium came. So I will repay 3 lakh 30,000. I will repay how much, guys? 3 lakh 30,000. It was decided by the company to issue the following. For the purpose of redemption, they are issuing the following: 25,000 equity shares of 10 each. How much equity shares? 2 lakh 50, and debentures 1,000 into 100, which is 1 lakh. You are required to pass. The issue was fully subscribed and you have to pass, show journal entries. So this we have to do a proper full-fledged sum for 4 or 6 marks. Okay. So in this, they are repaying preference shares at what? Premium. That means entry 3 also will come. So entry 4 also will come. Should I transfer to CRR here? Yes. You are repaying how much? Preference shares repaid how much, guys? 3 lakh 30. But I told take only face value. For the purpose of CRR, take only what, guys? Face value. Logic I will explain by the end of this sum. Why you will not take fully. So you will take 3 lakhs minus what is the fresh issue of shares, sir? Any fresh issue? Read properly. Is there any fresh issue? It was decided by the company to issue the following: 25,000 equity shares of 10 each. How much, guys? Then fresh issue is there, no? How much fresh issue? 2 lakh 50,000. So how much to CRR? I told take only fresh issue of what? Look at my notes. Look at the notes. You will compute face value of preference shares redeemed. In this question, what is the face value of preference shares? 3 lakhs minus, look at the notes, face value of fresh issue of equity of preference shares, if any. In this question, what is the face value of equity shares? 2 lakh 50. So how much for CRR? 50,000. Let's go check if they transferred 50,000 in the last entry. Where is that? P&L to CRR 50,000. Are you following, guys? Are you understanding? But how many entries to pass? When I look at the question itself, I should know. Redemption of preference shares, how many entries? 4 entries. Apart from that, extra what is there in the sum? Issue of equity shares, 1, no. Redemption of preference shares, 4 entries including CRR. Issuing equity shares, how much? 1 entry. Issuing debentures, how much? So totally 6 entries. Go down and check if they have 6 entries. 1, 2, 3, 4, 5, 6. Perfect. Are you following, guys? Let me run through the 6 entries for you to understand. Look at this. First entry, we are issuing equity shares. How much? 2 lakh 50. After issuing only I can redeem. Then only I will have cash. Look at this. Bank account debit to equity share capital 2 lakh 50. Are you following? Next time issuing debentures. So entry will be bank account debit to 14% debentures. How much? 1 lakh. Are you following, guys? So bank account debit to equity share capital 2 lakh 50. Bank account debit to 14% debentures 1 lakh. Are you following, guys? Clear? Next, let's go in the order that we know. What is the first entry? Redemption of preference shares. Preference share capital account debit to preference shareholders. Look at this entry. Preference share capital account debit 3 lakhs. Premium on redemption of preference shares 30,000 to preference shareholders 3 lakh 30,000. Next entry I told you is payment of preference shareholders to bank. How much? 3 lakh 30. Then in our flow, the third entry was transfer of premium to general reserve. Look at this. P&L account debit to premium on redemption. How much? 30,000. And in our entries, last entry was transferring to CRR. How much, guys? 50,000. That is this entry. P&L to CRR 50,000. Are you guys following? Understood all the entries? How many of you studying this chapter for the first time? Oh, everybody understood? Sure, guys. Understood all the 6 entries, guys. See, I am not solving because we can save time. We will do next sum. Getting it? This is a proper exam question for 4 to 6 marks. 6 journals, 6 marks. Since it's the first time new addition to syllabus, they might ask a basic sum like this. Proper sum with all transfer. Understanding? Now, Hayek had a doubt. Sir, ideally, shouldn't it be 3,30,000 minus 2,50,000? Transfer to CRR should be 80,000 only, no, sir. Was his doubt? Correct? Actually, it's 80,000 only. If you look at this, my free reserves reduced here by how much? By transferring to CRR. And by transferring premium, it reduced by another 30,000. So, effectively, my reserves have dropped by how much? 80. That means the money available, my savings is reduced by how much? 80. So, liabilities are happy. Because this is 30 only, the other one is 50. That's another way of learning. Now, you got the answer, Hayek. Clear? Everybody following? Clear? This much in-depth concept they will not ask in exam. Exam, what they want? 6 journals. You understood all the 6, guys. 4 for preference shares, 1 for issuing equity shares, 1 for issuing debentures. That's it. Okay. Come down. I'm just seeing which sum you can solve. Okay. Let's go to previous sums that we missed in the gap. 7 is over, 6 is over, correct? 5 and 4 is pending. Let's do both of those. Yeah, now it's time we can do 5. 5 we can easily do. Illustration 5. They have given us the following information. Equity and liability. Shareholders' funds is 2,90,000. Reserves and surplus is 48,000. Current liabilities, trade payables is 56,500. Then they have given some assets, cash and bank. Don't expect this balance sheet to tally. If it's tallying, well and good, but they have given an extract. Okay, fine. The share capital consists of this 2,90,000, correct? This 2,90,000 what a breakup is giving. Consists of rupees 50 each equity shares, 2,25,000 and preference shares of 65,000. So he has given the breakup. Equity shares is 2,25,000. Preference shares is 65,000. Are you following, guys? Clear? So equity is 2,25,000. Preference is 65,000. Reserves and surplus comprises of profit and loss only. That means the full 48,000 is P&L. Are you guys following? Understanding, guys? Next, in order to facilitate redemption of preference shares at a premium of 10%, that means preference shares is how much? 65,000. Premium 10% means how much? 6,500. So totally I will repay 7. How much, guys? 65,000 plus 6,500 is how much? 71,500 only I am going to repay. Okay, for that, company is doing 3 things. Sell investments for 15,000 rupees because they don't have money. What is the value of investments in books, sir? 18,500. That is being sold at 15,000. So I have a loss of 3,500, but I got cash of 15,000 to finance part of redemption from company's funds, subject to leaving a bank balance of 12,000. What is the current cash? That means they are saying cash can reduce, but my closing cash should be at least 12. It should not become 0. I should have a closing cash of 12,000. To issue minimum equity shares of 50 to raise the balance funds required. Beautiful sum. In every sum, they tell us how much equity shares have to be issued. In this, I have to find out how much equity shares have to be issued. Proper, nice exam sum. Okay. Now, how many entries? Let's try. In this preference shares, all 4 entries will come? Yes, all 4 entries. Apart from that, how many extra entries we have? Sale of investment, 1 entry. Issuing equity shares, 1 entry. Totally 6 entries. I will do the sum in detail. Let's understand one by one. First, we should know how much equity shares are issued. Otherwise, there is no point, correct? Look at the question and tell me what is the cash available in question. 31,000. Perfect. In this, how much I can use? 12,000 you should keep it separately, like a savings, correct? So I can use how much? Correct? 19, sure? Yeah. 19,000 I can use. Then, apart from this, I am selling investment. Investment sold, how much? 15,000 rupees. So, how much cash is available now? How much? 34,000 rupees cash is available. How much cash do I need? You are repaying preference shares. For repaying preference shares, face value was 65,000 plus 6,500 was the premium. So you need 71,500, but I have only 34,000. That means if I minus 71,500, what is my shortfall? How much? 37,500 rupees I need money. How will I get this? The equity shareholders are sitting. I will give money, whatever you want. Correct? That is the last entry. To issue minimum equity shares of how much, guys? 50 each to raise the balance of the funds required. So that means 37,500 divided by 50. How many shares? 750 equity shares into 50 will be issued. Are you following, guys? Let's go check equity shares issue. Look at this. Bank account to share application 37,500. So this is the new working that we have in this sum. Are you understanding, guys? Easy, clear, guys? Can you quickly compute how much to transfer to CRR? It will take, if you understood the concept, it will take you 6 seconds. How much to transfer to CRR? How much? Okay. How to compute CRR transfer? Follow carefully, guys. What is the face value of preference shares redeemed? 60. 65,000 is the face value of preference shares redeemed. What is the face value of new equity issue? 37,500. So 65,000 minus 37,500, how much? 27,500 will be the amount I will be transferring to CRR. Can you see 27,500, guys? Clear? Understanding? Following? This is the workings. Quickly make a note. Quickly make a note, guys. Then rest of the sum, you have to pass 6 journal entries. 4 for preference shares, 2 for issue. Can you try and pass the entry once? You pass the entry, don't look at me. Use these workings. Pass the 6 entries without looking at the solution, guys. Don't look at the solution, including recording students. So far, the 6 sums I solved. You are just looking at the screen. This sum, I have done some base workings. Using this, I want you to pass 6 journal entries. What are the 6 journal entries? 4 entries for redemption of preference shares, 1 for issue of equity shares, 1 for sale of investment. These will be your 6 entries. Quickly pass it, guys. Recording students included. Pass it in 5 minutes. We will check it. Because only when you solve, you will know the mistakes that you are doing. Because after going home, you don't have the time. Straight away, you will go to exam. So at least 1, 2, 3 sums we will do in the class. This sum little bit I am helping you for the 6 entries. Next sum you will do everything by yourself. Quickly guys, do it fast. Then we have to do one more sum. Do the 6 entries. If you are done, check the answer in the book. See if you are having entries as it is. I will start discussing in few minutes. I am keeping the question for others. Recording students, don't search for fast forward button. Do it fast by yourself. Finish, Shweta. All 6. Okay, let me brief through. By now you should have finished, guys. Look at this. We found out 37,500 is the share issue. So bank account to share application 37,500. That same share capital 37,500. Then redemption of preference shares. We saw preference shares capital is 65,000. Premium is 6,500 to 71,500 in our template entries. First entry. Were you able to do it daily by yourself? Next entry was, we will go in the same order. After this, next entry is payment of preference shareholder to bank 71,500. Then transfer of premium P&L to premium 6,500. Then transfer of CRR P&L to CRR. How much, guys? 27,500. And then sale of investment bank account loss on sale to investment. Are you following, guys? Clear? But you just have to be careful that in this question, reserves and surplus given is how much, guys? 48,000. Can you see, guys? You just have to be ensured that this is sufficient. In this question, it is sufficient. So we didn't discuss. Correct? Sir, what do you mean? P&L is 48,000. So from 48,000, first we sold investments. What is the loss in that? 3,500. Then premium was there. Premium on redemption of preference shares. So minus 6,500. Then we transfer to CRR how much? 27,500. After doing all of this, what is the closing balance of P&L? 10,000. So balance is still available. So we were able to do. But some sums, what if balance is not there? We have to check that also. Are you understanding, guys? Clear? Can we proceed to next sum? Have you all understood this honestly, guys? Able to do it? Okay. Next. Illustration 4. So if we finish 4, 1 to 7 all done. Correct? Illustration 4 is easy. I will brief. I want you to try it. No journals. Only workings. Somewhat like this. But not the same thing. But in this ideology, you have to do some workings. Okay. Illustration 4. The board of directors of the company decided to issue, look at this, issue. How many shares they are not saying? We have to compute. Like previous sum. We have to compute. Minimum number of equity shares of rupees 9. One share is 9 rupees. We have to issue. How many shares to issue? You will find. Delhi will find. To redeem 5 lakh preference shares. Okay. The maximum amount of divisible profits available for redemption is 3 lakhs. That means the P&L is how much, guys? 3 lakhs. Calculate the number of shares to be issued by the company to ensure that the provisions of section 55 preference shares are complied. Also determine the number of shares if the company decides to issue shares in multiples of rupees 50 only. Now, I'll give you a brief, then you compute. What is the preference shares here? 5 lakhs. I want to redeem preference shares. At par or premium? Par. Nothing about premium. So, if I redeem 5 lakhs, how much to transfer to CRR? 5 lakhs. Because I am not doing fresh issue. But for me to transfer to CRR, the entry is P&L to CRR 5 lakhs. But do I have 5 lakhs? No, I have only. That means I can transfer to CRR only. That means I have to do some fresh issue. How much is that fresh issue is asking? How much, guys? 2 lakhs. But how many shares? You compute that number of shares. Look at this. So, out of 5 lakhs, 3 lakhs if it's profit, P&L. So, I am left with only 2 lakhs. How many shares? 4. So follow guys, look at this. We almost finished the sum. Look at this. Amount of preference shares to be redeemed is 5 lakhs. I told you, for transferring to CRR, I have only 3 lakhs. That means if 3 lakhs is there, then minimum proceeds should be at least 2 lakhs. That you already found out of, correct? When I explained it, if you understood. So if 2 lakhs is what I have to make fresh issue, 2 lakhs divided by 9 is how much? 22,222.22. Now you have to round off to what? You can't do 0.22, correct? So either the answer will be 22,222 or 22,223. Sorry? So now look at this. Either it has to be, the answer we got is 22,222.22, correct? Till here have you all understood? 100%. Now look at the beauty of this. Using basic maths, you will do it as 22,222. If I issue 22,222 shares, one share is how much? 9. How much you will get? One lakh 99,998 of 998. How much you need? You need 2 lakhs, but you didn't get 2 lakhs. Are you following? That's why you have to issue how many? 22,222. 3 into 9, how much is coming? 2 lakhs? 7. So what they are asking, are you understanding? Here you can't apply basic maths and round off to 22,222. Gone. Because minimum money, minimum fresh issue to do is how much, guys? 2 lakhs. If you keep 22,222, you are raising only 1,99,999. You are 1 rupee short. 1 mark also matters. So you should make it 22,223. That's the answer in the book also. 22,223. Are you following, guys? But they told the number of shares should be in multiples of 50. Correct? So 22,223 is not multiple of 50. So they are making it 22,250. I can either make it 22,200 or 22,250. I can't reduce it. So I am increasing it to 22,250. Are you following, guys? Dilly surely understanding? No, doesn't look like that. 22,000. See, you understood the answer up to 22,223. Okay. Question last line what he has told, the number of shares to be issued should be issued in multiples of 50. Is this a multiple of 50? No. What is the nearest multiple of 22,223? 22,200 or 22,250, because both these can be divided by 50. If you make it 22,200, it is less than this, not sufficient. So you will make it 22,250 is what you will issue. Understanding a proper question for 3 to 4 marks, but you will not be able to solve unless you know the concept of CRR. If you mug up CRR formula, you will not understand. Are you getting it? Honestly, are you understanding, guys? Here online, if you are understanding, can you put in the chat yes if you understood, please? I want to know if you have actually understood. Put in the chat. Otherwise, any doubts, put it over there. Sure, all of you clear, guys? So illustration 4 is done. 5 we finished. 6 also over. 7 also over. 8, 9, 10 now. How many are there totally? 3 more. Okay. Okay. This sum let's do illustration 9. 8, sorry. Okay. Why I am not solving, writing every sum, just to save time. Explaining, going through the solution. Illustration 8. The capital structure of a company consists of 20,000 equity shares of 10 each, fully paid up, and 1,008% redeemable preference shares of 100 each. So what is the equity share capital? 2 lakhs, preference share capital is 1 lakh. Okay. Undistributed reserves and surplus. General reserve is how much? 80,000. P&L is 20,000. They are talking about something called investment allowance reserve, out of which 5,000 not free for distribution as dividend. Total is 10,000. That means it's some new reserve, investment allowance reserve. What is the balance in this reserve? No, 10,000. In that 10,000, 5,000 is not free for distribution of dividend. That means how much is free? 5,000. That means he is trying to communicate, out of the 10,000 reserve, I will split it into two. The investment reserve has two parts. 5,000 you consider as free reserve, other 5,000 is not a free reserve. Understood that? That is enough. Rishi, understanding that? Because he is saying not free for distribution as dividend is 5,000, the other 5,000 is free for distribution as dividend. Securities premium 2,000, what to do with that? Nothing. In this chapter, ignore securities premium. Cash at bank amounted to 98,000 rupees because we need to repay preference shares. I have only 98,000, but preference shares is how much, guys? 1 lakh into 100 is how much? 1,000 into 100 is how much? 1 lakh. I need to repay 1 lakh, but I have only 98. That means that also is something you should keep in mind. Okay. Preference shares are redeemed at a premium of 10%. 1 lakh 10,000 I need. I have only 98,000. Simply you can't go past the entry. You have to check if cash is available. And for the purpose of redemption, directors are empowered to make a fresh issue. Super, sir. Make a fresh issue after utilizing the undistributed reserves and surplus. This is mix of the fourth sum. Okay. Subject to the conditions that 12,000 shall be retained in general reserve and shall not be utilized. You have to pass entries for the above arrangements. Preference shares, how many entries? 4 entries. Issue of equity shares, how many entry? 1 entry. We all know the entries. Amount only we have to fill. Are you following, guys? Clear? Okay. Correct. So I will give you 2 minutes time. You need to find two things. How much I will transfer to CRR? What is the fresh issue of equity shares? Nothing new. Already I have done, but I will do it again in detail. But I want you guys to try this. If you find out how much is CRR, how much is fresh issue of equity shares, you can do all the other entries. So give it a shot. Give it a shot. Try it out, and then I will explain. Don't do 6 journal entries. Working note you do and try to do this. Then I will explain. Okay. I can do it, but I want you to try it because only then you will know how much you have understood. All the previous sums, I have done the whole sum. Proper exam question for 6 marks. Do it guys, do it fast. Finished. Oh, Binay, can you give me the answers, guys, so that recording students can cross check if they also got the same wrong answer or same correct answer? Yes. One by one. Vinayak CRR 25,000, fresh issue. CRR 75, fresh issue 25,000. Dilli Babu, same answer. Anybody else different answer? Others same. All of you got the same answer. Okay, fine. Let's quickly cross check. I'll just cross check over here. Excellent. Fresh issue is 25,000. Transfer to CRR. Where is that? 75,000. Perfect, guys. Excellent. You have done by yourself, means you have understood. But let me brief for the benefit of everybody. What is the general reserve available in this question? Totally 80,000. But I can use only 20. He told don't touch. That means you should not touch. So I can use only 60. What is the P&L available? Profit and loss account 20,000. Help me with the values. Any other free reserve? Yes. Out of that investment allowance reserve, I can use 5,000. That means from my existing reserves, I can transfer to CRR 60, 80. Correct, huh? Correct, guys. Yeah, I can transfer how much? 85,000 rupees is available to transfer to CRR. However, my preference charge is how much? Face value 1 lakh. I am going to repay at how much? 1,10,000. That means you are going to repay premium of how much? That premium will reduce from my reserves. So out of the total freely available free reserves of 85,000, 10,000 will be used by premium on redemption. That means how much is still available with me? 75,000. This 75 only I can transfer to CRR. Correct? So my total issue of fresh issue is, redemption is 1 lakh. Total redemption is 1 lakh. In this redemption, I am having 75,000 from existing reserves. Then balance 25,000 will be fresh issue. Are you following, guys? That working only they would have done somewhere down here. Okay. I don't know if you understood this or not. I don't know if you understood this also. Have you understood, guys? How 25, 75 came? Everybody did by yourself. Perfect. Understood this, how CRR came as 75,000? Because CRR transfer is 75,000, I have 75,000 from reserves. So I have to make a fresh issue of 25 so that I can do redemption of 1 lakh. Now all the entries is normal. If you look at the entries, fresh issue will be 25,000. Online, if you got the answer before I solved it, type yes sir, I got 25, 75. Then 75 is transferred to CRR in the following 3 sources. Preference shares redeemed 1 lakh preference share capital account debit, premium on redemption 10,000, 2 preference shareholders 1 lakh 10,000. My payment is preference shareholders to bank 1 lakh 10,000 and profit and loss transferred for premium 10,000 rupees. Are you guys understanding? Clear? Okay. Fine. Okay. I hope you guys online also understood. Last 2 sums are nothing new. Concepts are done. Like this, he will twist and ask. Cash, I can't use 12,000 rupees. Reserves, I can't use 20,000 rupees. How much is CRR? How much is fresh issue? This is the maximum complication possible in this chapter, even in CA Inter. All these sums are CA Inter sums. Now in CA Foundation. Okay. Perfect. Now, illustration 9 is nothing new. Same sum, one more model. Balance sheet is given as follows. Now you will know, by the time I read the question, you will know, how, yeah, I should do this. Preference shares is 35 lakhs. Equity shares is 1 crore. But the difference is, this preference shares is 70 paid up. Securities premium 5 lakhs. CRR is already there in question. That means in the past they have done some preference share redemption or something. CRR is there, 20 lakhs. Sir, what I can use CRR for? What is the purpose of using CRR? CRR cannot be used for anything. CRR is section 69 of Companies Act. You can't use for anything except one use. It can be used only for bonus issue. How we finished bonus issue chapter the other day. So in the bonus issue chapter, I told you for issuing bonus shares, you can use CRR, securities premium, free reserves. I told you should use CRR first. Why I told first? In bonus issue, CRR should be used first. Why? Because that is the only purpose. CRR can be used only for bonus. Then better use for that. Your parents gave you 5,000 rupees, 10,000 rupees. They told 5,000 should be used only for buying books. Can you use for something else? No, you will use for that. Like that, the CRR, only one use is bonus. So better use for that. What if I use for bonus? Anyway, it will be converted back to share capital. When will share capital be paid? At the time of winding up. You got the logic, guys? So CRR is basically locking the money till the time of winding up. Even if you convert to bonus shares, it will be repaid only at the time of winding up. So money will be paid only at the time of winding up. So creditors won't mind if you convert to shares. Are you following, guys? Clear? Sweta, understanding? Okay. General reserve is 50 lakhs. Bank balance is 15 lakhs. Next, under the terms of the issue, preference shares are redeemable on 31st of March 2022. We are now in 31st December 2021. They are repayable after 3 months. Correct? After 3 months. 31st December 21, 31st March 22. After 3 months, we have to repay. At 5% premium. First sum where they are giving dates. If they give dates, what you should do? Write the date in journal entry. Otherwise, lose 1 mark. Your choice. In order to finance the redemption, the company makes a rights issue of 50,000 equity shares of 100 each at 110 per share. So, new issue of rights. 10 rupees is what? Premium. Rupees 20 payable on application, 35 including premium on allotment, and the balance on 1st Jan 2023. This you are already very good. Share issue, application, allotment, first call, first final call. So issue of shares, you know, left, right, center. Studied in school, already we studied in company's account, issue of shares, correct? And allotment was made on 1st March. So till here, anything complicated? No. Basically, they made a new issue of shares. How much, guys? 50,000 into 100 at 110. I don't care about premium. Only I will take the face value. How much? 5 lakhs. Preference shares is 35 lakhs. Remember that. Okay. Next. The money due on allotment was duly received by 31st of March. Perfect. The preference shares were redeemed after fulfilling the necessary conditions. You have to pass the necessary journal entries. Oh, he told ignore date column. Super. That means no marks for date if you write also. 50,000 into 50 lakhs. Sorry, you are right. 50 lakhs is the value of rights issue. Look at the entries, guys. Okay. Now, preference shares is partly paid up. Correct? So, section 55 says you cannot redeem partly paid up preference shares. So, what you should do? Make it fully paid up, then redeem. That's all. How to make fully paid up? Look at this. Preference shares final call. How much? 30 rupees, and he paid bank account to 8% preference shares. 30 rupees, 15 lakhs. So now preference shares from 35 lakhs plus 15 lakhs. Now it has become 50 lakhs. Correct? Now what I will do? Repay. So unkita 15 lakhs vangi, you want 50 lakhs tharan. Act is like that. Act is saying you should redeem only fully paid up shares. Okay. So I will ask you, you give 15 lakhs, I will repay 50 lakhs. Okay. Next, also they did some rights issue. Application la how much? 20, allotment la 35. Those entries you know, guys. Application, allotment, look at that. Bank account to share application 20 per share, then allotment 35 per share. I am running through these entries because nothing new in this. Okay. So bank account to share allotment, you know these entries very well. Now we have to transfer to CRR. How we will transfer to CRR? How much is redemption? 50 lakhs. How much is the new issue? New issue is how much? New issue, follow carefully. This is where the dates come important. When am I doing redemption of preference shares? First, look at this. The preference shares were redeemed on which day? Check the question. Are redeemable on 31st of March. So 31st March 2022. Up to this date, how much preference shares or equity shares is done? Up to allotment only is done, correct? Because the balance final call is on, look at this very carefully, 1st Jan 2023. Are you following, guys? So if you look at the breakup, it is 50,000 equity shares of 100 each at 110 now. Let us write that breakup. Rupees 110 per share, they are collecting as follows. How much on application? 20. Allotment how much? 35 including premium. I don't care about premium. I only need face value for CRR. This call is happening after redemption of preference shares. Correct? That means as of 31st of March 2022, how much of fresh issue is made? Only 20 plus 25. So you made only 45 into how many shares? 50,000, correct? How much is that coming to? 22 lakh? 50,000 is the amount of fresh issue. What is the face value of preference shares redeemed? 50 lakhs, correct? So now I will do 50 lakhs is the face value of preference shares minus 22 lakh 50,000 is the new issue on the date of redemption. So how much for CRR? 27 lakh 50,000. Check the answer. CRR 27 lakh 50. Understood? Sir, why sir unnecessarily in this sum they gave application allotment first call for this only? Like this, they will change little bit here and there and ask, but we know the logic of CRR. What is the equation? Face value of preference shares redeemed minus fresh issue of equity of preference shares, both face value on the date of redemption, whatever this is there. So you got 27 lakhs 50. This workings you have to show somewhere, guys. This breakup, this you have to show. Here he gave in the narration itself, he showed. Are you following? Then after this, you know, look at this. Preference share capital account debit 50 lakhs. Premium on redemption, 5% premium, 2 lakh 50. Two preference shareholders, 52 lakh 50. Preference shareholders to bank, 52 50. General reserve to premium, 2 lakh 50. So this is redemption of preference shares in combination of fresh issue of equity shares with application allotment call. Easy or difficult? But lengthy. 8 marks or 6 marks you can ask. Are you following, guys? Everybody genuinely understanding, guys? Okay. Super. What about the amount received excluding premium on fresh issue, which is 22 lakhs 50,000 till the date of redemption should be considered for calculation. What I explained only is the note. He is saying why I should take only 22 lakh 50, because on the date of redemption I received only this and you should not consider premium. That's why he is saying exclude premium. Understood? Okay. Last sum, illustration 10 also is the same, guys, with small adjustment. Look at this. He is saying with the help of details in previous sum, further assuming that the preference shareholders holding 2000 shares fail to make the final call. What I should do? Reduce that because they have not paid. Made the final call under section 55. You are asked to pass the necessary entries for 31st March with corresponding figures from 31st December, assuming the shares in default are forfeited after giving proper notice. Same thing. Look at this. Only thing is share final call. Okay, basically is continuing the sum, guys. So You are asked to pass the entries, relevant extracts as of 31st March 2022 and corresponding figures on 31st March 2021. Okay. How much call money they have not paid, guys? Yes. Same sum. So how much is the balance call money? We will see here. Out of 110, 20, 35 is paid here, 55 is paid. So final call will be how much, guys? 30, yeah? Can you check once? 30, final call is 55, but they are not bothered about final call. What are they explaining here? He is saying, so here if you see, allotment is 35, application is 20, 55. So 55 is left, correct? In this previous question, when was the final call? And the balance on 1st Jan. Now what are they saying in illustration 10? With the help of illustration 9, further assuming that the preference shareholders holding 2000 shares fail to make the payment of final call under section 55, you are asked to pass the necessary journal entries and show the relevant extracts from the balance sheet as of 31st March 2022. But final call is only on okay, fine, correct. Okay, you are absolutely right. So this 55 rupees not paid is for equity shares. They are talking about, you are absolutely right. So in the starting, that preference shareholders had to pay 70 rupees, 30 rupees unpaid. In the 30, 2000 is not paying. So they are asking that, perfect. So preference share final call to share capital 15 lakhs. In that 48,000 paid into 30, 2000 into 30 did not pay. Therefore, my new preference share capital will be how much, guys? Minus 60,000. So from 50 lakhs, how much is not paid? 60,000. You will be left with 49 lakh 40,000. Now look at this carefully. If they are not paying call money, I will forfeit fully. So my preference shares is 50 lakhs. I'll explain with rough working. 50 lakhs. Out of this, who didn't pay call? 2000 shares into 30. Because they didn't pay call money, full shares are forfeited. So I will also forfeit what they paid. So totally I will forfeit 2000 into 100. How much? I will be forfeiting 2 lakhs, correct? That means how much is left in preference shares? So when I am redeeming, when I am repaying, I will repay only 48 lakhs, correct? I will repay only 48 lakhs. What is the amount of new equity issue? 22 lakhs, 50 in the previous sum. So from this I will minus 22 lakhs 50,000. How much is CRR? 50,000. Let me explain again for the small confusion which came. Look at this, guys. The total preference share capital, if everybody paid the money, it would have gone to 50 lakhs, correct? But one shareholder who is having 2000 shares did not pay 30 rupees per share. Because he didn't pay 30 rupees per share, his full share I will forfeit. That means I will forfeit full 2000 into 100. That means 2 lakhs I will forfeit and I will not repay him the money. So how much of shares I should redeem? Only 48 lakhs. So out of 48 lakhs, how much is fresh issue from the previous sum we computed? In equity, 22 lakhs, 50,000. So I will transfer to CRR only 25 lakhs, 50,000. Are you getting it, guys? Understanding? So let's go check if the CRR is correct. Yeah, look at this. Transfer to CRR is 25 lakh 50,000. Are you following, guys? Understanding? Hello? Everybody clear? What is additional in this sum? You have to pass entries for forfeiture and calls in arrears. That you know from the basics, so I am not dealing that in redemption of preference shares. Fully paid up. So in this fully paid up shares is only for 48,000 shares of, because he didn't pay call money. If you don't pay call money, I will forfeit. No, that is basics, not section 55. Normally in share capital chapter, if one shareholder is not paying call money, I will forfeit. So I forfeited. Understood, Sweta? Clear? Okay. Initial attempts, I think they will ask the illustration 9-10 is little on the heavy side. They will ask the other sums. 1 to 8 you be very clear. 9-10 go through once. Okay. So with this we are done with all the 10 sums in redemption of preference shares. Have you genuinely understood, guys? The below practical sums also are very similar only. Nothing new. You can go through that. One sum is there for practice. You can go through this at your end. Fairly simple. Okay. And practice. That's it. Nothing else is left in this chapter. We are fully done. How many of you studying first time and understanding fully? Perfect. So with this we are done with redemption of preference shares. Thank you. Yesterday, which sum I told I will do in dissolution? Okay. We will do fourth sum and go for break. Okay. I can't start redemption of debentures because it's a big chapter. I will do this now. After break, I will do relative capital method. That's sum, and then I will start redemption of debentures. Tomorrow we will do the balance and then law. Okay. What page is this, guys? 10.220. Okay, hi guys, welcome back to Accounts CA Foundation new syllabus. We are in dissolution of partnership. Those who are watching this session, please go and watch the previous session first, part 1, where we are discussing basically Garner versus Murray rule. In Garner versus Murray rule, last class we explained the whole concept and we did illustration number 2. End of the class I gave you some notes where I told if a company or if a partnership is having only one type of capital account, then the way you find that ratio for sharing the loss will be different, and I gave you a note also. Note if the partner is having debit balance, how to do that. That is the last complicated sum we have in GVM rule, illustration 4. Let's do this sum. Okay. Look at this. A, B, C, D are sharing profits in the ratio 4:3:2:1. Decided to dissolve their partnership on 31st of March when their balances are as follows. They have creditors so much, employee provident fund, okay. Capital account, unlike previous sum where there was fixed and fluctuating, then it's easy. I will take fixed ratio. Here you have A and B 40 and 20,000. C and D have 3,200, 8415. Okay. So two partners have debit balance before the sum started. Now, following information is given. We have adjustment 1, adjustment 2. We will come to adjustments in some time. Then adjustment 3, for which we have to pass entries. D became insolvent and a dividend of 25 paisa in a rupee was received in respect of the firm's claim against his estate. That means he is able to pay how much, guys? 1/4 he is able to pay. He is able to pay only 1/4. Prepare necessary ledger accounts is the question. Are you following, guys? So as usual, even though it's GVM rule, what type of GVM sum is this? This is a case where only one capital account is there and one partner or two partners have debit balance and one partner became insolvent. Who is that? D. So his loss, he can only bring how much? 1/4. So he can't bring how much? 3/4. What he can't bring, that should be shared by other solvent partners. Who are the other solvent partners? A and B and C. But C has a debit balance, so he will not share the loss. This only I gave as note in the previous class. Correct. According to mutual agency in partnership, all solvent partners should share the loss equally. But this is as per GVM rule, UK court, House of Lords ruling. So court has told he will not pay. What is the logic? See, C already debit balance. Already he has to bring money. Don't ask me more money. He is already in loss with respect to the firm. That was the court ruling. Okay, fine. So as usual, what you should do first in a sum? Let's quickly do a sum. Prepare 3 ledgers. What are the 3 ledgers? That's all. Realization account. For first step is to transfer all the items. So let's do that practice. Realization account, cash account, and then partners capital. Who are the partners? So you have to prepare 4 columns on both sides. Quickly prepare that, guys. Okay. Quickly prepare the 4 ledgers. 3 ledgers, sorry, 3 ledgers in your notebook. We'll go to adjustments later. First, as usual, what should you do, guys? Transfer all the assets and liabilities to realization account. Transfer all the partners related items to partner account. Cash, if any, to cash account. So look at this. First, I will transfer all the assets. Bank is 535. So that will go to which account? Cash or bank account. To balance brought down 535. Balance brought down 535. Then data, stock, prepaid, plant and machinery, patents. All these I have to transfer realization account. Quickly I will do it. 2 debtors. I am closing. This you know. What is the entry for closing? We are debiting the realization account and crediting the respective asset. So 2 debtors, somebody help me out. 2 stock, then 2 prepaid, next plant and machinery, patents. What are the amounts? Debtors is 15, 850. 25 200, 800 prepaid, 20,000 plant and machinery, patents is 8,000 is patents. Similarly, I will transfer liability. Common question students will ask is, sir, creditors I will transfer, sir. Should I also transfer employee provident fund? That is also another liability. I will just transfer it as it is. Both will be transferred to my realization account. Idea is to close my account. So balance sheet should become 0. Then what you will do if you don't transfer? I have to transfer. So by creditors, by employee provident fund, by creditors 15,700, by employee provident fund is 6,300. Capital accounts transfer respectively. So capital account, come down here. For A and B, it is on the credit side by 40,000, 20,000. For C and D, it's on the other side. To balance brought down 3,200, 8415. 3,200, 8415. Clear, guys? So I will transfer everything. Quickly cross check. This is how your capital account will look. Opening balance, cash will look like this. Realization looks like this. At this point, balance sheet total is how much, guys? 0. This you will get 1.5 mark if you do it correctly. Okay. Now there are totally 3 adjustments. I have to do all the 3 adjustments one by one. Okay. One of the creditors took some of the patents which is having a book value of 5,000 at a valuation of 3,200. Balance creditors was paid at a discount of 400. We need to understand this in detail. Okay, look at this. The total value of creditors is how much? 15,700. Okay. In this they are saying one creditor took patents at a valuation of 3,000. No, patents book value is 5,000, but he is taking it at a value of 3,200. That means I will split my creditors into 3,200. Another one is balance creditors 15,700 minus 12,500. Let me explain this adjustment. The total creditors is 15,700. In this, I am splitting my creditors into 2 parts, A and B. Splitting them into A and B. What A is saying, what you have to pay me is 3,200. You are not able to pay me 3,200. So I will take your patents, which is worth 5,000, but I will take for my full due of 3,200. So something worth 5,000, he is taking for 3,200 because you are not giving him cash. So the actual entry for this would have been creditors account debit 3,200 loss to patents how much? 5,000. Here I will write P&L account debit 1,800. I have a loss. Okay. The remaining creditors, they told, I don't want all these patents, I want cash. For you, I will give you a discount of 400. What is the discount of 400? If I reduce 400, he is saying, you better pay me 12,100. For this entry will be realization account debit to bank 12,100. Correct? Actually, instead of realization, you will debit what, guys? Creditors. Correct? Are you following, guys? Understanding this, sir? So we have to pass 2 separate entries for both the parts, both sides. This is easy. This is like a normal adjustment. So I am paying cash of how much? 12,100. Let me do that posting first. So I will write here by, not creditors, by realization. In bracket I will write creditors 12,100. In realization account also I will write down to bank how much? 12,100. To bank is 12,100. Here I will write down creditors. We will go check that. Look at this. 12,100. Are you following, guys? Okay. This everybody is clear? Now what to do with this Other part 3200 which he took. What to do? I can't pass this. This entry you understood. P&L debit 1800, creditors account debit 3200, 2 patents 5000. Correct? Hello? But I can't pass this entry because creditors is now transferred to realization, patents also is in realization, loss also is in realization. Because there is no involvement of bank here, there is no involvement of partners capital. So my entry will become realization to realization 5000, again realization 1800, 3200. So no entry to pass. I will not pass any entry, but still it is automatically accounted. How, sir? If you look at this, in realization, my patents is worth 8000, creditors is worth 15,700. One is on debit side, one is on credit side. One guy took the other thing. One creditor of how much? 3,200 took the patents worth 5,000. So automatically what's my loss? 1,800. It got accounted in the ledger itself without passing any entry. I will pass an entry only if realization account or bank account or capital account is disturbed. Here the entire entry is happening within realization, so I will not pass any entry. Are you following, guys? Clear? Everybody clear? Understanding? Fine. Let's go to next adjustment. There was a joint life policy. Ayo, JLP, sir. JLP comes, I'm getting scared. Partnership, JLP, it will not sit. In dissolution, JLP is nothing. Treat it like another asset or liability. Only in admission, retirement, death, the JLP will continue. Here I am closing. Closed na settlement. JLP of 20,000 not mentioned in the balance sheet. Well and good. And this was surrendered for 4,500. That means how much cash I got? So if you get cash, entry will be bank account debit 4,000 to what? Realization, no JLP account, to not even mentioned in balance sheet. So to realization 4,500. Are you following, guys? Yes. Premium? Nothing to do. Not mentioned in the balance sheet. So you never accounted it now. That if I settle, basically, I thought my assets was so much, but without my knowledge, there was one more JLP worth of 20,000 which I didn't account. Surprisingly, I got 4,500. Happily take it. Don't ask any question. Bank account debit to realization account. That's it. Okay. Are you following, guys? So my entry will be by bank 4,500. In cash, I will write to realization JLP 4,500. JLP is easy, guys, not like admission. When you settle, how much you are getting, that's it. Okay. Following, guys, clear? Adjustment 1 is over, adjustment 2 is over. Forget Garner versus Murray rule. These two adjustments can be adjustment in any resolution sum. Are you understanding, guys? Okay. Next, last adjustment. The remaining assets, whatever is there, were realized at the following values. Debtors at 10,800, stock at 15,600, plant and machinery at 12,000, patent at 60% of their book values, expenses so much. Let's pass entry for one by one. What is the entry for debtors? Bank account debit to realization, how much? 10,800. Like this, first let's do for debtors, stock, plant and machinery. I'll explain the balance after that. Okay. Fine. So I will write here. By bank, I am combining the three, guys. I am combining the three for simplicity purpose. Which three I am combining? Debtors, stock and plant and machinery. Can you combine in exam? No. Classroom purpose I am combining. So 10,800 plus 15,600 plus 12,000. How much are you getting? 38,400. So I am passing one combined entry. Assets realized 38,400. Come down here in cash to realization asset 38,400. Are you following, guys? So, to realization of asset 38,400. Super. Next, now come to the last two adjustments. Patents at 60% of their book value. Follow very carefully. What is the value of patent in question? 8,000. How much creditors took? 5,000 worth he took off. So, how much is left? 3,000. In that 3,000, I am getting only 60%. How much is that? 1,800 only patents gave. So, entry will be bank to realization. How much? 1,800. So, I will write down. Write with me, guys. By, sorry, here 2. Realization patent. How much? 1,800. And in realization, I will write down by bank 1,800. Correct or wrong? Correct. Are you following, guys? See, patent totally was 8,000 in books. In this, our creditor friend took 5,000 for some other value. So, I am left with 3,000 into 60% is what I am getting when I sell. So, I got 1,800. What is the doubt in this? Patent full away? If the creditor took the full 8,000, then this adjustment will not come. If the adjustment still comes, creditor took the full patents and then they are saying balance realized 6,000, question drafting error. Okay. Only because there was still some patents left, the balance is sold for 60%. Next, the expense of realization amounted to 1,500. What is the entry for that? Realization account to cash or bank. How much? 1,500 given in the question. Instead of 1,500, if you write 1,800, what will happen? Some will tally, but you will not get marks. So, by realization in bracket expense 1,500. Here I will write realization what, guys? To bank realization expenses 1,500. So far, what is the involvement of GVM rule here? Nothing. Normal dissolution sum. Okay. We have done everything. Now all the adjustments are over. Now we have to find out what is the loss, what is the profit, all of that. Correct? Correct, guys. Now follow. Once go and check in the balance sheet. Is everything which is transferred to realization settled? Debtors is settled. We got realization. Stock was realized. About prepaid, they spoke anything? No, they didn't speak anything about prepaid. Plant and machinery we realized? Yes. Patents we realized? Yes. Liabilities are also creditors we paid off. But this employees provident fund 6,300, nothing is given. Can I leave it like that? No. It is a liability of, it's on the liability side. Employees provident fund is a liability which I have to pay. So I have to make the payment now, even if question is silent. What is the entry for paying liability? Realization account debit to bank. How much? 6,300. Are you following, guys? Sir, I will explain again. If question is saying liability need not be paid, it's a gain for me, but I have to account it. I will tell you why. Look at this. If you don't pass that entry, credit side I have a 6,300, debit side nothing is there, then it leads to a gain of 6,300, which is not correct. They have nowhere told PF need not be paid. I have to pay, so the entry will be in cash account by realization employees provident fund 6,300. Here I will write to bank employees provident fund 6,300. Are you guys following? Are you understanding why we are doing this? Sure? Okay. Prepaid expense. Now what will happen to prepaid expense, guys? Now prepaid expense, they have not given any adjustments. Can I assume I have realized prepaid? Can I assume I realized prepaid? No. So here they have assumed that prepaid is basically gone as loss. See, prudence concept. Liability I have to pay. So I am assuming I am paying liability of 6,300. I can't assume 800 is recovered because what is recovered is specifically given. The remaining assets were realized as follows. That means prepaid is not realized, loss. If you look at the realization account, prepaid is accounted on the debit side at 800, nothing on the credit side. That means it's a loss. Are you following? Now can you find out the closing balance? Is it loss or profit? How much you are getting? Are you getting the same amount in this, in what you did? Book we are getting 2350. See here, are you getting 23,050? Total I don't want to know, leave it. Okay, you do in notebook, guys. After doing all of this, okay, give the total. How much you are getting? 89,000. 89,750. 89,750. Rishi, understanding? Done, guys. This loss will go to which partners? 4 partners. In what ratio? The 4 ratio. What is that? 4:3:2. So can you split in the ratio 4:3:2:1? Write it, but don't write in capital account. Compute and keep it. Compute and keep it. 4:3:2:1. Please compute and keep it, but don't transfer. Okay, following, guys. Hello. Now, don't write, you compute how much ever you got for the realization loss between the 4 partners. Compute it, but don't write in capital account. Now come to capital account, guys. Who's insolvent? D. What is the loss of D? 8,415. But how much he is able to bring in? They told he can bring a 25 paisa in a rupee. 1 rupee has how many paisa? 4 paisa. 1 rupee, I think 100 paisa only, no. So he is able to bring 25 paisa. So 1/4 he can bring. So how much is that? How much is that, guys? 2103. Let's check. Hold on 1 second. $2103. They did 2680. Not only I'm checking. Can you do 8415 plus 2305? How much? 10. In this, can you do 25%? 2680. Why did they take this? Only solvent partners having credit balance has to bear the loss. That is fine. He will bring his share of loss in cash. Okay. They have considered realization loss and then they are doing the share. But as per the provision, if you see, if capitals are not fixed, all transactions drawing profit or pass through capital accounts should not exhibit current accounts. Will determine after all adjusting all reserves, accumulate profits to the date of dissolution, all drawings, interest to the date of dissolution. But before adjusting, this is the provision, but before adjusting profit or loss on realization account. But here what they have done, they have adjusted the realization account, which is against the principles of Garner versus Murray rule. What they have done here is, they are not following GVM principle. But you should not do like that. See, அவன் என்ன பண்ணிருக்காங்க, normal sum மாதிரி realization loss debit பண்ணி, the total loss comes to 10,720. In that 10,720, 25% he is able to bring a D. So by bank recovery is how much? 2680. So if you reduce 2680, what is the balance loss? 10,720 minus 2680. How much? 80. This 8040 is the deficiency of who will share this? A and B. Correct. So A and B will share this. They will share in the capital ratio before realization. Perfect. So let me explain. So let's write the, I'll explain guys. Okay. Let's write the realization loss. 2 realization loss. How much? A share is how much? We are right. Book is also correct. We are also on the correct track. Notes also nothing to change. Let me do the sum. What is the loss for all the 4? 9220, 6915, 4610, 2305. Let me explain from here. Okay. 2305. What is the total loss of D? Total this we just computed 10,720. D total is 10,720. In that he is able to bring how much cash? Now follow guys. I am writing realization loss. Let me explain. We will write. I am finding the total loss of D. Total loss of D is 10,720. Adila is able to bring 2,680. Are you following guys? So out of 10,720, he brought in 2,680. How much is the loss now? 8,040. Now follow very carefully. This 8,040 should be shared between whom? A and B in what ratio? In capital ratio. Which ratio? Closing means what you will take? 40,000 minus 9220. You should not consider that. Are you following guys? You should take the ratio before realization loss for those two partners. So before realization loss, what is the ratio? 40 and 20, which is 2:1. I will take 2:1. Are you following guys? This is the other GVM, other part of GVM. I will again repeat. We wrote realization loss for all the partners. Yes, we will write that. For anyway, we will write in capital account. After writing this, I found out D's loss is totally 10,720. Out of 10,720, he is able to give me 2680. So what he is not able to give is 8040. The question is, this 8040 in what ratio I will share? That only the provision says. If it's a fixed capital, you will use fixed capital ratio. If it's only one capital, you will do all adjustments in capital account except realization. So you should find what will be the capital balance before realization loss. So without considering these two, you will take only 40,000, which is 2:1. So this 8040 in the ratio of 2:1, how much you are getting? 5360 to 2680. Who is going to share this? A and B. Why C will not share? Because it's already having a debit balance. So entry will be A's capital account debit 5360, B's capital account debit 2680 to D's capital 8040. This is the entry that we will share in for GVM. Are you following guys? Are you getting it? Now you will post this. How you will post? In D's capital, you will write by A's capital by B's capital. How much? 5360 and 80. Perfect. Similarly, I will write on the other side. Other side, what I will write, guys? 2 D's capital. So 2 D's capital in whose column? A and B's column. 53602680. This adjustment only is the GVM sharing of loss using the ratio of 2:1 before adjusting realization loss. So our notes say the same. What is our note saying? The loss will be shared in the ratio of the partner's capital before adjusting realization loss. Because after adjusting, what is the logic, sir? After adjusting realization loss, the new ratio is the ratio after dissolution. I want to know what was the ratio before dissolution. Correct, exactly. If there was salary, interest on capital, interest on drawings or drawings, all those things I have to adjust with this 40,000 and 20,000. But I should not adjust realization loss. For example, if there was drawings I will reduce here 5,000. Then the new ratio would have been 35,000 is to 20,000. Are you following, guys? Reserve. If I have reserve, let's say my reserve is 15,000. I will add 15,000 here. Then the new ratio will be 40 plus 15. 55,000 is to 20,000. Are you following, guys? Everything I should adjust except realization loss. Are you following? So you should do a rough working. If at all other adjustments are given, you will do a rough working. Are you understanding? Are you clear? Yeah, correct. For insolvent partner, we have to account realization loss. For other partners, we will not account realization loss only for the purpose of ratio. Okay. No, in previous sum, we didn't have to worry about this because there were 2 capital accounts, fixed and fluctuating. So anyway, I will take fixed capital ratio. All the adjustments goes to my current account. Fluctuating. Understanding of? Are the notes matching? What was the notes you wrote in the last one? Above the note, what did you write? In previous class, I have to scroll up quite a bit. Yeah, here, this is it. Look at this. Ratio to share loss of insolvent partners, capital closing balance after all adjustments except realization loss profit. That is nothing but capital plus or minus all these things. Correctly we wrote. Nothing to change. Correct? Following, guys. Now with the sum, are you getting clarity? Okay. Now come back to the sum. Now rest of the sum is normal. I told you in GVM rule. What did I tell you? If a partner has realization loss, that much loss money should be brought in by the partners. Correct? Whatever is the loss, you should bring in money, I told her. So what is the loss here? 9220 6915 4610. D cannot bring money. He is insolvent. So these 3 partners will bring in money. So what will be the entry for that? By bank, how much? 9220. C will bring money for his share of loss. So that note I gave you, look at this. That partner with debit balance, the partner with debit balance where I gave notes, look at this. But if a partner is solvent, has a debit balance in capital account before start of dissolution, such partner will not share the loss of the insolvent partner, but he will bring money for his share of loss. That also is not doing. Why is that? Okay, insolvent partner loss he will not share. So this money he will bring in. How much is that? Yeah, 6915 and 4610. Same thing I will write in capital account, sorry, bank account 2. A, B and C. Can you tell me the total, guys? 9220 plus 6915 plus 4610. 23050. One 18,440. How 18,440 came? We are adding 9220 plus 6915 plus 4610. Are you following? The cash that the partners are bringing in. Guys, 1 second. I will add it myself. 9220 plus 6915 plus 4610 in the calculator you have to do it. 20,000, 745. Sure, I can trust now. I can take this time. Okay. These kind of mistakes if you're doing an exam, that's why better actually. Instead of writing total, you write separately, guys. 9220 plus 6915 plus 4610. Okay. Fine. Now all the adjustments are done. Can you close the capital account of ABC? See which side balance is coming. For everybody, credit side, huh? A and B, debit side. Okay. How much is coming for A? To bank. For A is how much? Yeah, take your time. Do it for ABC. Total will be 49,220. Correct? 49,220. A's difference is 34,640. For B, order total will be 26,915. 26,915. How much? 17,320. Correct? 26,915 minus 6,915 and 2,680. Let me cross check. Yeah, perfect. 34,640, 17,320. 34,640, 17,320. That's the answer in the book also. Are you getting this, guys? Hello? Getting it? What is the answer for C? C order total is 7,810, 7,810. So his total will be 3,200. So if I look at the answer also for C, the answer will be 3,200. Get these answers, then I will explain how do you close the sum. 3,200. Check if you are getting this, then I will tell you how to close the sum in a minute. All of you getting this, guys? Okay. So now what is the meaning of this? I have to pay A how much? 34,640. I have to pay B how much? 17,320. C has to bring in more how much? 3,200. So C is going to bring more cash. He is not sharing D's loss. Avanoda loss. His loss is bringing more. So how much I will write for C? By bank how much? 3,200 rupees. So in cash account I will again write to C's capital 3,200. Are you following, guys? C will bring in more 3,200. Now can you find closing cash and tell me how much is that? After all the adjustments, add all these properly, slowly you add, minus these, add all these, minus this, and tell me what is the closing cash available. 535 plus 4,500 plus 38,400 plus 1,800 plus 2,745 plus 3,200. 69,180. I want the cash available. So the total is 69,180. So what is the closing cash? 49,280. Correct? This is the cash available. Correct? Okay. 49,280. How much should I pay A and B? 34,640 and 17,320. Can you add these two? How much again? If you add these two, are you getting 49,280? Are you getting it, guys? So I will write here by A by B. A will take 34,640. B will take 17,320. Cumulatively, they will take so much. $51,960. Check the bank account if everything is there from our note. 535 is there. Then realization. A's capital, B's capital, C and D's capital. This 3,200 you didn't add up. 2680. That we didn't write here. Huh? Okay, so 2D's capital 2680. Now how much you're getting if you add? So we forgot to write this 2680, correct? So bank D got in 2680, his share of 25%. So you will get, now add this 2680 which I forgot to write. Again, these mistakes you should not do, I can do in the class. How much you are getting? 70. 51,960. Is it matching total now? And the total is 70, the 8, 71,860 is the total. Let me explain one more last time. Okay, so follow guys. Basically what is happening over here, whatever realization loss is there, A, B and C have brought in that money. After they brought in that money over here, after they brought in the money, I noticed that I have to pay A 34,640, pay B 17,320 and C has to bring in 3,200. So if I go to cash account and write 3,200 for C, we missed to write 2680 which D brought in. We only did one side posting. So total cash available was 51,960 which is nothing but 36,640 plus 17,320. Cash account and capital account will tally. With this sum will come to an end. Following up. Understanding. If you understood, type a yes in the chat guys. If you have any doubt, now is the time to ask please. One question from Hemant online is, sir, can I use the notebook as turning it, because partner has 4 capital accounts, can I turn it and do? If you turn and do, cash account will be like this, realization will be like this, capital will be like this. You are confusing yourself and the examiner. Preferable to do it in the same side. I think it's not hard. 4 debit, 4 credit, neatly you can do it. If you want to turn, then turn the full sum. One ledger if you turn, or it's okay. If you finding it very hard, then capital account alone you will turn. But just understand, examiner is going to correct lakhs of papers. Your paper alone if you turn, you are making the examiner turn the answer sheet. You want to irritate the examiner or no? You decide that. Yes, Mahesh. Yeah, what I will prefer is in the answer sheet, one side you do debit side, one side you do credit side. That is better. Instead of turning the notebook, if you will have 2 sides, no, middle cut point. So this side you do debit side, this side you do credit side. That is better. So it will be more clean. Got it, Hemant? What I was saying is, this is the notebook, correct? This is your notebook, guys. Here you write debit side, 4 columns. Here you write credit side, 4 columns, instead of turning it. If you feel space is not sufficient. Okay. So I hope you guys have understood. Let me know in the chat. Yeah, Google Meet and live. Perfect. Fine. With this, we have completed GVM in full. We have done 2 sums with the full concept. That's all GVM possibility is there. With that, we have finished GVM. Thank you guys. Fine. We'll go for break. Come back. See you all at 5:35 p.m. Roughly 30 minutes break. After you come back, we'll do relative capital method and then we'll start off redemption of debentures. Okay. Fine. I see a mock starting on 5th. Only 100 students can write, correct? So, மொத்தமா 3 mock test paper இருக்கு. 3 for law, 3 for accounts. Sorry? 2. So, this time they are doing third. Online, am I audible for everybody? Okay. Agenda now is simple, guys. We will complete dissolution today. I don't want to carry it forward for tomorrow. Quickly in 5 to 10 minutes, I will do dissolution of LLP first because it's a new addition. One sum is there. Actually very easy. Then we will do that relative capital method sum. That should take about 1 hour max. And then I'll tell you the dates for mock test if you want to write and marathon dates. That will just take 5 minutes. That time should be enough. If we have time left, I will introduce redemption of debentures today. Okay. Okay. Hi guys, let's quickly discuss in dissolution chapter in CA Foundation Accounts new syllabus. They've added something called dissolution of LLP. Partnership means you are all comfortable, admission, retirement, death. Dissolution of LLP means you might think, "Ayo, this is completely new." No, we are going to finish this in just 5 minutes. Dissolution of LLP sum is same as dissolution of partnership. What is the difference? Instead of partnership, it is going to be an LLP. If you remember your law syllabus, there used to be a provision in dissolution of LLP which says when should an LLP be dissolved. It was part of our law syllabus. They removed in law and they added in accounts. That's all. There used to be a provision called voluntary winding up or winding up by the tribunal. So how LLP can be wound up? LLP can be wound up either by itself, voluntarily it can wind up, or LLP can be wound up by the tribunal. Court will order. If you remember in old syllabus law, this was the question. Law la remove pantan, accounts la add pannitam. So you still have to remember those 5 to 6 points which was there. What are those points? When can LLP be wound up by tribunal? LLP wishes to wind up by itself. So we are only discussing when LLP will be wound up by tribunal. You will apply to tribunal saying we want to close the LLP. Tribunal will order for winding up. Next is they have less than 2 partners. In law we would have studied LLP should have minimum 2 partners. If it falls less than 2 for more than 6 months, we will wind up. Unable to pay its debts. That means liabilities are more than assets. LLP has not acted in the interest of sovereignty or integrity of India. LLP is doing some terrorist activities. LLP is bringing the name of India down. Then tribunal will order for winding up of LLP. LLP has failed to submit statement of accounts. There are two important filings for LLP: statement of accounts and solvency or annual return for more than 5 consecutive financial years. Or if LLP is doing anything which is apart from these above 5 points and tribunal feels it is just and equitable, you have to wind up. Now these 5-6 points can be a theory question in accounts. We have theory in accounts. They can ask this as theory. Coming to the sum, there is just one illustration in study mat. They are saying P and Q are partners sharing profits in the LLP. Balance sheet is as follows. I am not going to solve the sum. I am just going to run through the sum. It is same as dissolution of partnership. Instead of LLP, let me write partnership, same sum. So when those who we all studied dissolution of partnership, you have to open 3 accounts: realization account, capital account and bank account, cash or bank account. We used to do the following steps. Those who are watching this video first time, go watch the other dissolution basics, where first step we transfer all the assets and liabilities to realization account, transfer the respective capital to capital account, then whatever adjustment is there we will take it through realization account, then realization profit loss is transferred to capital account, finally partners are settled. Correct? It is a basic dissolution sum. Look at the adjustment. They have given some assets, they have also given partners capital, and they have given current account this side and current account this side for 2 partners. So what? One has debit, one has credit. In this sum, they would have done current account and capital account separately. You can merge both, nothing to worry. Okay. Then reserves and bank overdraft is given. Reserves will be transferred to which account, guys? Partners capital, current account. So you keep capital account separately, do all the adjustments in current account. Look at the adjustments. If you have studied dissolution, see if these are familiar. First look at the adjustment. We are transferring liabilities this side. Assets are transferred to the debit side of realization of partners capital account. Opening balance is written. Bank account I wrote the opening balance. Nothing great from other sums. Small adjustments. First, P took over 50% of the stock at 10% less than its book value. Okay. What is the stock value in the question? 35,000. He took over how much stock? 50%. So 50% is 17,500. He took 17,500 worth of stock at 10% less than book value. So minus 10%. How much you will get? 15,750 is the value of stock that he has taken over for himself. So what will be the entry for this? Partner has taken this up. So I will write piece capital account debit. How much? 15,750, because that is the price he is accepting to reduce his share. To what, guys? To normally I will credit stock account, but stock is in realization. So I will credit realization for what value? 15,750. If I come down realization account, you will be able to see. Where is it? Yeah, by piece capital stock 15,750. In piece capital I will write to realization 15,750. Are you following, guys? Familiar adjustment. Then and the remaining stock is 17,500. Remaining half is sold at a gain of 15%. So what is the gain of 15%? It is going to be 17,500 plus 15%. How much? 125. Entry will be bank account debit to realization. Correct? I am selling it. So my entry will be bank account debit to realization account 125. I will write here bank account debit. Look at this. Where is the bank account? Yeah, here I will write credit side. I will write stock 125 and bank account I will write. It's part of this 1,48,870. Then the remaining assets they have given breakup. Plant and machinery 30,000 and 50,000 respectively. Clear? Unrecorded investment was sold for 25,000. So 30,000, 50,000, 25,000. Look at this. 30,000, 25,000, 50,000. Are you following, guys? bank account realization, bank account realization, bank account to realization. Then debtors realized only 90%. So debtors also bank account to realization 90% of the value, simple adjustment. 1245 are recovered from bad debts which was written off last year. Unexpectedly some bad debts came and told take the money. So what entry I will write for that? Bank, say no bad debts recovered. I got the money now. Bank, how much I got? 1245 to what? Realization. Because it's an income for me. So in realization account I will write down bad debts recovered 1245. In bank account debit side I will write 1245. They included everything as part of one item. They total over here, see 1,48,870. Outstanding bill for repairs is 2000. 2000 is paid. Entry is realization to bank. That's it. You are required to prepare the account. Anything new in this? It is nothing but dissolution of partnership and basic sum. Now after you transfer everything to realization, you close and you find the profit. We found a profit of 2620. This profit will be transferred to partner's current account 1310. Partner's current account closing balance is transferred to partner's capital account. You have to settle the partners 83,060 and 68,810. That will be the same balance left over in the bank account. With that sum will get over. It will tally beautifully. Are you following? Yes, any doubts? Clear? Understanding? Is this same as normal dissolution? If you are watching this first video, you will not understand anything. We have finished so many sums and dissolution. Are you getting it, guys? That's it. So dissolution of LLP is nothing new. You don't have to panic. That's why we are doing this sum. Okay. I'll proceed to the next concept. With this is done. Thank you. Thank you, Soldier. Recording. Each thing I'll do a separate recording. I'll later upload on YouTube. If not for this June, I will re-upload in September, re-upload in Jan. That time, if somebody needs, so for that purpose, fine. Okay. Now, okay. Let's start off another method in dissolution of partnership. Last sum we are going to do in dissolution of partnership, which is relative capital method. Under piecemeal distribution, there were two methods, maximum loss and relative capital. Maximum loss we finished yesterday. Those who are watching recording, please go watch that first, because I explained what is the logic of piecemeal. Why we are doing piecemeal, we explained. I gave you a format of one statement and I told you for both the methods it's the same format, except for settlement of partners alone we either use maximum loss or relative capital. So if somebody is watching this directly, go watch the part 1 or find that video and go see that. You will find the link in description. Now come back to relative capital method. Relative capital method, we have one sum in the study mat. We are going to do that sum, but I have to first explain the concept to you, the concept of relative capital. Okay. Now, in this method, payment of liabilities is going to be the same. I will pay the liabilities as such. Only when it comes to payment of partner's capital, we have to adopt a different method. In maximum loss method, what assumption we did? We assumed that this is the last payment and then we found out what was the maximum loss and share that loss. Correct? Here, we are going to do a different concept. Let's take the illustration given in the book first before I go to the sum. I have three partners A, B, C. Their capital is 15,000, 18,000 and 9,000. Let me write it this way, sorry. A, B, C. How much, guys? 15, 18, 9,000. It's an illustration in the book. Example, profit sharing ratio is 2:1. Okay. This facts like this will be there in every question, guys. Now, look at this. What we are understanding, by looking at this. This is the capital, this is the profit sharing ratio. This method has only one extra working note apart from the normal statement we are going to do. What they are saying, for 1 rupee of profit, see, imagine the company earns 5 rupees profit. How much will A take? 2. How much will B take? 2. How much will C take? 1. Correct? Any doubts in this? No. C, for 1 rupee profit in the business, he gave a capital of 9,000, meaning all the sums we have done, we keep profit sharing ratio separately, we keep capital separately, we don't read them together. Correct? Imagine my profit sharing ratio is 1:1, but my capital, A gave 70,000, B gave 7,000. Does it make sense? Will you do partnership with somebody? They are saying we will do 1:1, but you give 70,000, I will give 7,000. Will you accept? If profit sharing ratio is equal, capital also should be equal. Ideally, will you agree for a partnership like that? But look at this. In this business, they have kind of fooled C. For 1 rupee profit, that fellow Pavam, he invested 9,000 rupees. So I want to find out for every 1 rupee of profit, how much capital everybody invested. So what I will do, I am just going to divide capital by profit. So I am going to divide this. Are you following? So I will tell, for every rupees 1 in profit, A invested how much? 7,500. B invested 9,000. C invested 9,000. Are you following, guys? Now who is the smart person between A, B, C? A. For 1 rupee profit, he invested only 7,500. B and C are the fools who invested 9,000 for every rupee of profit. So while repaying, whom you will repay first? A or B or C? B and C, because B and C paid more. Correct? So I will tell, B and C will tell, we were the ones who made mistake. A, you were smart. Ideally, we also should have given only 7,500, but we gave 9,000. So what they are saying, let us take A's capital as base. Let us take A's capital as base. We should have invested 7,500 only. So what should have been the capital? If the capital is in the ratio of 2:2:1. So I will write revised capital. If capital is in the ratio of 2:2:1, how to find that? If I need 2 rupees profit, for 1 rupee profit I am giving 7,500, then for 2 rupees I should invest how much? A correctly gave 15,000. Now B is saying, I also should have not invested 18,000. If I invested 7,500, if I wanted 2 rupees, I should have invested 15,000. Correct? C also is saying, you are right, I invested 9,000. No, I should have invested only 7,500. So they are saying the capital should have been 15,000, 15,000, 7,500. But actually it is 15,000, 18,000, 9,000. So A is saying, okay, fine. Now I will be silent. My capital is 15,000. It should have been 15,000. So totally, I didn't give anything extra. B is saying, correct, you are right. Capital should have been 15,000. But like a fool, I gave 18,000. So how much extra I gave? 3,000. C is saying, then don't leave me. I also gave extra of 1,500. Both of them gave extra how much? 3,000 and 1,500. This extra also should be in the ratio of 2:1. I'll explain. Extra. Now, this is called the excess capital. This extra also is in the ratio of 2:1 now. So it's fine. So it is fine. What if instead of 3,000, this was 5,000, 1,500? Then again we have to repeat the step to find excess of excess. We will do that in the next step. For now you stop with 3,000 and 1,500. So look at this. How much B gave extra? B gave extra how much, guys? 3,000. How much C gave extra? 1,500. Correct? So while repaying, the provisions are saying, if I have only 1000 rupees left. Whom I will repay first? Nothing for A. I will give only B and C both gave extra, and both my extra is in the ratio 2:1. So I will give this 1000 to B and C in the ratio of 2:1. Until this 4500 is repaid, A will not get anything. Are you following, guys? Understanding? So while repaying, I will repay like this. This is the sum. Are you getting it, guys? Now let's go to the main sum. Illustration 8. Let's do it. The sum will actually be the same till you come to payment of partner's capital. Till then, I will only keep paying my liabilities. You have to prepare one working note like this, excess of excess capital. Follow, guys. Let's start off with the sum as usual. When that part comes, I will again prepare this working note. Only one difference we are going to have is, if this 3000 and 1500 is not in the ratio 2:1, you have to again repeat the above step. You have to keep repeating until the excess is in this ratio. Are you understanding logic, guys? Everybody clear? Let's go to the sum. Illustration 8. There are more complications here. Thankfully, we don't have that in the study mat. Okay. A partnership was dissolved on 30th of June. The balance sheet was on balance sheet on that date was as follows. You have cash and sundry assets. You have the 3 capital that I have to pay, and you have liabilities. Fine. Just like the same sum I can solve using piecemeal or maximum loss. I told you guys, the same sum we can solve using piecemeal, maximum loss, or normal sum itself. Okay. The assets were realized in installments. That's the whole concept of piecemeal. And the payments were made on proportionate capital basis. Creditors were paid 29,000 in full settlement of their account. So creditors, I have to pay 30,000, but they are taking only 29,000. Expense of realization estimated to be 5,400, but actually it was only 4,000. And then this amount was paid on 15th of September. How many installments we have? 3 installments where money came, and the loss ratio is 2:1. Again, we have to open the same statement. Can we open it, guys? Let's do it together. Okay. How many of you studying relative capital for the first time? Almost full class. Same statement. Easy sum, guys. Particulars. I told you template. What's the template? First you will write particulars followed by cash. Big column for particulars followed by cash. After that, all the creditors in the same order of payment. First sundry creditors are first loan. Loan, because this is loan of B. This is loan of B. So I will write first the external liabilities first, correct? So first I will pay creditors, then I will pay loan of B, then only I will pay A, B, C. Correct, guys? Let me write the opening balances. Opening cash, how much? 10,800. Creditors is how much? 30,000. But we have to pay them only 29,000. 1,000 is discount. So, but let me write the opening balance as it is. Loan of B is 10,000. ABC, A is 76,000. B is 48,000. C is 36,000. Are you guys following? Hello? Now, before even I go to the first installment, existing cash I have to use up. First cash I will use for what? No. Expense. I have to keep it aside for expense, guys. We missed in the previous sum, correct? So, expense here is how much? It is actually 4,000, but I don't know now. I know that only on 15th of September. So, I have to keep aside, reserve cash for expenses. How much? How much, guys? Reduce 5,400. At the same time, creditors gave me a discount of 1,000. I don't have to pay that. That also I have to reduce of discount received. How much, guys? 1000. Are you following? Now I will write revised balance. Revised balance after above adjustments. So revised cash is how much? 5000. Revised creditors is 29,000. Loan is 10,000. 76,000. 48,000. 36,000. Are you following till here, guys? After this, what I will do next? Cash paid to creditors. So minus 5,400 minus 5,400. Again I will write revised balance. I am doing in detail, so you will understand every step. Now what is the revised balance of cash? 0. Revised creditor is 20. 23,600. 10,000 is same. 76,000. 48,000. 36,000. Done, guys. After this only you are getting the first installment. First installment is how much? 25,200. So I will write first installment 25,200. This 25,200 who will take? Creditors and loan. So I will reduce up to over here 23,600. Loan how much I will reduce? 1,600. Correct. Nothing for capital. So I will write balance after first installment. Cash will of course become 0 because I use the cash. Creditors becomes 0. Loan becomes how much, guys? 8,400, 76,000, 48,000, 36,000. I am yet to touch capital. Till here, like I told you, relative capital method or maximum loss method, no change, same, copy paste. Okay. Next we will go to second installment. So I will write down second installment. Second installment, how much I am getting? How much? 60,000 I am getting. Okay. First you pay off whom? Loan. How much? 8,400. Partners we will decide later. So now you write down balance before paying partners. After paying liabilities, before paying partners. How much cash I have? 51,600. Liability became 0. Partners is 76,000. 48,000. 36,000. Are you following? Okay. Now the question is this. This 51,600 only I have left, but I have to pay 76,000, 48,000, 36,000. Correct? To pay this, how to pay? Who should get how much? Relative capital method will answer. Are you following, guys? Everybody clear? So for this I will come down to a working note. Working note 1. I have to prepare one separate working note till the end before you can go back there. So I will write down particulars. What are the partners? ABC or PQ or ABC. How much? 76,000, 48,000, 36,000 capital. From here I want you to participate with me. Okay. I will give you time to copy. Recording students, participate, because this table only is the unique concept in this method. What is the profit sharing ratio? 2:1. 2:1. Now, this is 1, this is 2, 3. 3 is called capital per unit of profit. It's called capital per unit of profit. Capital per unit of profit, guys. We will divide 1 divided by 2. 1 divided by 2. How much you will get? 38,000, 24,000, 36,000. 38, 24, 36. Let's check that once. 38, 24, 36. Perfect. Okay. What do you mean by this? Let me explain. For every 1 rupee of profit, how much A invested? Loudly. 38,000. How much B invested? 24,000. How much C invested? 36,000. Who is the smart one? B. B for 1 rupee profit invested only 24,000. Others are fools. They invested 38,000 and 36,000 for 1 rupee profit. So everybody is saying, no. I want my capital also to be in the ratio of profit sharing ratio. All these days be enjoyed. At least at the time of dissolution, you pay me first. So what would have been my capital if I also contributed just like B? So what should have been the capital? We will call that as revised or required capital, keeping B as base. B is saying, okay, I will be silent. All these days I enjoyed. Now is your time. So B should have invested how much, guys? 48,000. 24,000 for one profit share. But he is investing. He wants 2 rupees. So 24,000 into 2. Same way A also is saying, see, I would have invested 24,000. Now if I should have invested 24,000, A will tell 24,000 into 2 how much? 48,000. C will tell 24,000. Are you following this, guys? Are you understanding this part? Sorry? Explain. Basically, A actually invested 76,000, which is not correct, because he invested 38,000 per unit of profit, per rupee of profit. When you looking at B, B invested only 24,000. So A is saying, if I invested like you, how much I would have invested? If I invested, everybody are saying, because B is the smart one, if everybody wants to be smart, if I invested like B, how much I will invest? So A is saying, that means I should invest only 24,000. I want how much profit share? 2. So I will invest 24,000 into 2. I will invest only 48,000. Are you getting it, guys? B has anyway invested only 48. C is saying, Anavasyama, unnecessary, I invested 36,000 for 1 rupee. I should have invested only 24,000. So now we want to find out, okay, how much excess they contributed, each of them. Look at this. A should have contributed only 76. He gave how much? 76 for 2 units. But he should have given only 48 for 2 units. So how much extra A gave? 76 minus 48. So I will write excess capital. How much, guys? 28,000 is the excess capital of A. What is the excess capital of B? Nothing. He gave correctly. What is the excess capital of C? 12,000. Are you guys following? So A and C are saying, until you repay my excess capital, no 1 rupee also should not go to B. So first A should get back how much? 28,000. C should get back how much? 12,000. Then only the rest will get that money. Okay. But now A and C are comparing among themselves. A and C are comparing among themselves. A is saying, both A and C are fools because they gave more money. Now who is the bigger fool? Between A and C, we have to see. So again I will write the profit sharing ratio between A and C. Okay, 2:1. Repeat the step. Profit sharing ratio. I will find capital per unit, you will find how much, guys? 14,000 and 12,000. 14,000 and 12,000. Here, follow carefully, 14,000 and 12,000. Here, A is saying, follow very carefully. Now the new capital is 28,000 and 12,000. Both of us gave extra, but who gave more extra? A. A is saying, see, C is saying, for 1 rupee, I gave only 12,000 rupees. But for 1 rupee, you gave 14,000 rupees. You are the bigger fool. Excess la excess. Both of us gave extra, but who gave more extra? A. So now I will again keep, A is saying, I will keep you as the base. If you are the base, I will find a revised capital. C will still remain at 12,000. A is saying, I should have given only 24,000, correct? Which is nothing but 12,000 into 2. I should have given 24,000. Now look at this very carefully. I'll explain the logic over here. Look at this very, very carefully, guys. What is the excess capital of A and C? 28,000 and 12,000. Now, what ratio is this? It's not in 2:1. So we found out for every 1 rupee of excess capital, 1 rupee profit of excess capital, C gave 12,000, A gave 14,000. I am still a fool. I shouldn't have given 14,000. It would have been sufficient if I gave only 12,000. At least I could have compared my foolishness with C. I am now a bigger fool by 2,000 rupees because I gave 2,000 extra. So he is saying I should have given only 12,000. So if I gave only 12,000 extra per unit, for 2 units I will get 24,000. If I gave 24,000 extra instead of 28,000, then the excess would have been in the ratio of 2:1 now. 24,000 and 12,000. I will again repeat this part. Look at this. The excess is 28,000 and 12,000. Both of us gave extra, but our extra is not in the ratio of 2:1. So to make it in the ratio of 2:1, I am saying for 1 rupee extra, I should have paid only 12,000. So if I paid only 12,000 for 1 rupee extra, for 2 rupees extra, I should have paid only 24,000. I should have paid 24,000. If I paid 24,000 extra, if A paid 24,000 extra, if C paid 12,000 extra, our ratio would have been 2:1. But how much extra I paid? 28 instead of 24. So again, excess is how much? 4,000. For 28,000, 24 is 4,000. So A is saying, overall I paid 4,000 more extra than you. So look at this. B paid, what is B's total capital? 48,000. Write it as it is. Okay. What is A's capital? 76,000. What is C's total capital? 36,000. Who paid the most extra? A. How much extra? 4,000. Now I will write. Okay. A is saying, Nada irukradile nariya kurta. Highest extra. Remove that extra. So now you will still get 48,000, 72,000, 36,000. Now after this 4,000, what was this? Is excess on excess. We call this extra la extra. What is the actual extra they gave? 28,000 and 12,000. So for A, 28 la already 4 removed. Already 4 removed, guys. So now I will remove 24 for A. For C, I will remove 12,000. What is the revised capital? Sorry? Should remove? You should remove 28, but the 28 includes 4,000. So first I will pay 4,000. Now you get how much? 48,000, 48,000, 24,000. Now is the capital in the ratio 2:2:1. Now let me explain this. How to repay the capital. The partners paid 48,000, 76,000 and 36,000. First, I will pay whom? A. How much? 4,000. Till I pay 4,000 to A, others should sit silent. Others will sit. After I pay 4,000 to A, now the revised capital will become 48,000, 72 and 36. Now I will pay A and C how much? 24,000 and 12,000. After I pay A and C 24 and 12,000, then the revised capital of ABC becomes 48,000, 48,000, 24,000. Now the capital has reached 2:2:1. After this, you will continue to pay them in the ratio 2:2:1. I basically want to bring their capital in the ratio 2:2:1. Until it comes to 2:2:1, I am removing the excess paid. Are you following up? Understanding, guys? Delhi, understanding? Hurry. So, first to whom I will pay? A, how much? 4,000, not 28. 28 is what I should pay. But in the 28, first I will pay 4,000. Then after paying to 4,000, they will be left with 24 and 12. So imagine I have only 1,000 rupees left. Who will take that? A will take full 1,000. Imagine I have only 3,000 rupees left. Who will take that? A will take full 3. Imagine I have only 5,000 rupees left. Who will take that? 4,000 A will take. Remaining 1,000, 24,000, 12,000. I will start in the ratio 2:1 until this becomes 0. Are you following, guys? Clear? Now let's go back to our statement. Keep this in mind. This working only is there in the book also. Same dabba. So that's what we computed. Look at this final conclusion as per book. First fourth distribution sequence. First 4,000 will be paid to A. Next 24,000 and 12,000 for A and C in the ratio of 2:1. After this, others will be paid 2:2:1. Are you following, guys? Let's go back to our table. Same dabba is there here. Exactly what I did with the presentation thing. So this you have to do for any sum. This only will carry bulk of the sums. Marks, sorry. So if I come here, how much money I have? 51,600. In this, who will take first? A. So I will reduce first A share. How much? 4,000. And I will reduce for A 4,000. Are you following up? Now you find the balance after paying A. Do it multiple times, no problem, so that you don't make mistake. After paying A 4,000, how much is left? 47,600 here, 72,000 here, 48,000 here, 36,000. Are you following, guys? Next, who will take? A and C, how much? So I will reduce for A 24,000, I will reduce for C 12,000. So my cash also will reduce by 36,000. Now how much cash you have left? I am left with a cash of write the English well, cash left after excess capital paid 11,600. Now look at the capital 48,000, 48,000, 24,000. Are you following now? Are you getting it, guys? 11,600, 48,000, 48,000, 24,000. Now after this 11,600 who will take? All three will take in the ratio of 2:2:1. How much? I will reduce 11,600, 4640, 2320. Now what is the revised balance? Zero, 43,360 for A, 43,360, 21,680. Following, guys. Okay. Now last installment, how much we got? Third installment, how much? 80,000. But read the question carefully. Last installment we got 80,000 and they also told expense was estimated 5,400, but actuals, this amount was paid on 15 September, which matches my last installment. That means in the start of the sum, how much cash you saved for expense? 5,400. But the actual expense was only 4,000. That means you will get back how much? 1,400. That means last installment available cash is 81,400, which is my 80,000 plus 1,400, which I didn't use in the starting. Correct? Are you following, guys? Now this 81,400, how I will share? To the three people in the ratio of 2:2:1. What is the value, guys? 32,560, 32,560, 16,280. Can you tell me the closing? 10,000, 10,800, 5,400. Is this the answer that you have? Now check if this loss is in the ratio of 2:2:1. It's in the ratio of 2:2:1. This is the amount I cannot pay them. They will bear this loss. It's in the ratio of 2:2:1. This is your relative capital method. Easy, huh? Which is easy? Relative capital or maximum loss? Both, I don't know, but either, I mean, anything can come in exam. Both will not come in the same attempt. Okay. This is a little easy sum worth 10 marks. There are some complications. Interval they used to ask. Out of every installment, 1% will be taken by liquidator expense. So what they will do, every time we get installment, how much we got installment here? 80,000. In that you should remove 1% for liquidator expense. Are you following, guys? We used to have sums. Every installment la 1% we will remove. Like that they will complicate here and there in expenses. Otherwise, the core concept of this one will remain the same. This is not going to change. Which one? This table. This one is the new table. Correct? This will not change. Now same sum, if you solve in normal method, will you get the same answer? Can we quickly try that? I will just prepare only realization account. Go to the question. Look at this. First I am transferring sundry assets. How much? 2 asset, 1,89,200. Liability I am transferring by creditors, by A's loan, 10,000. Okay, B's loan, sorry. By B's loan, 10,000. Now, expense is how much? Actual expense how much? No, actual expense 4,000. So entry will be realization to bank. So I will write here to bank 4,000. How much creditors are paid? Only 29,000. How much loan is paid? Full 10,000 we paid off. Correct? So, and how much assets are realized? Compute the total of all three installments. How much you are getting? All three installments if you total 1 lakh. So I will write here by bank 1,65,200. Let me explain the account what I have done. Basically, liabilities I have transferred on the credit side, assets I have transferred on the debit side. I am doing settlement of expense and liabilities. Settlement of expense, settlement of liabilities. Asset realized is 1,65,200. Now can you find the total loss? Total loss 20. Can you split this in the ratio 2:2:1? 10,800, 10,800, 5,000. Okay. Is this answer tallying with this? So you can cross check your answer in exam. It will just take you hardly 2 minutes to prepare this roughly. This is assuming all the sums of realization, you are assuming that the whole amount is realized on the same day. But if it comes as piecemeal, how to give? You will give it like this. Are you following, guys? Easy. With this, we are done with relative capital method and we are done with our full dissolution. Thank you, guys. Okay. Just 2 minutes, guys. Just 2 minutes. Okay, I'll just give you a quick brief about marathon date and mock test, and then we'll start off redemption of debentures. Hi guys, so little important video for anybody writing CA foundation exams. After interacting with many students, two things I've learned from students is, one, sir, we struggle with revision day before exam, and we also struggle with presentation. So I'm going to quickly announce two things over here: details about marathon and details about mock test, and this is exclusively for students if you are writing your June 2024 foundation exams. Before I brief that, let me give you a small story. When I was a student, when I was going for classes, my teacher had some almost 30 to 35 years experience. He told me a story, not just one faculty, every faculty. They said in class 10, 11, 12, in our school days, you wrote multiple unit tests, pre-board exam, model exam, this half yearly, quarterly, so many times you wrote exam, got it evaluated by the teacher, fought with the teacher why I didn't get this half mark, and then you went for the board exams, correct? But I want to ask you guys, which is more important for you in life at this point? 12th board exams or foundation exams? Foundation. But for 1 year, everyone told 12th board. Till foundation you pass, that is important. That means you ask yourself for which you wrote more mock test. 12th board or foundation? 12th board for everybody. That means for foundation you are not writing enough test because it is not mandatory. So I will tell you about the mock test that we are going to conduct. That is one. It is mandatory, meaning you have to tell yourself, you have to write it. Okay. Second, most students, they study for 6 months, 9 months. We have a course called CPA US. It's basically CA of US. CPA US has only 4 papers. They don't have this nonsense like foundation, inter, final. I'm just joking, guys. Okay, it's a different model altogether. But the difference is, let's say you pass CA in Tamil Nadu, India. You can practice anywhere in India, but in US it's not like that. If you pass CA in any one state in US, you can practice only in that state. So they have their, what to say. And if you're a CA of US, you can be only in US. You can't go global. Indian CA now has global opportunities, correct? So what to say. But over here, one thing they do is, unlike how we have exams in June, September, Jan with schedule, in CPA US, I can decide when I want to write my exam. I will decide the schedule. I will tell paper 1, I will write on 1st Jan. Paper 2, I will write on 1st March. Paper 3, I will write on 1st October. That means for every exam, I will have 30 days gap. Are you following, guys? Which is again what happens in that. You have a lot of time. Imagine CA foundation 4 papers. For each paper 10 days. Will everybody pass in the first attempt? Easily. The problem is to revise in that 1.5 day. So for that, what we do as students, when I was a student also, marathons used to help. Because if you're attending, sir, now only I'm studying, sir, then you will get scared. Already studied law, you want to revise, then marathon will help you revise the whole subject in 1 day. So first, let me give you details of marathon. On 3rd June 2024, which is basically a Monday, 8 a.m. to whatever time, 7, 8 p.m, whatever time, we are going to revise full syllabus of law. I will take the marathon in 2 parts. Part 1 is going to be all the new topics added in new syllabus, like bailment and pledge, indemnity and guarantee, agency, Indian regulatory framework, and negotiable instrument act. I will finish off first, and little bit of LLP also. And part 2 will be our Sale of Goods Act, Indian Contract Act, Indian Partnership Act. I will take, and Companies Act, of course, Companies Act, which is part of the whole syllabus. We will try to cover the entire 100% syllabus with all key concepts. This will happen in 3 modes. It's going to happen in offline mode, in person, for you to come to class. You can also watch it not online live, you can only watch it recording. I am not going to give online live mode, only 2 modes, either offline or recording mode. Recording will be uploaded 1 or 2 days later. To join the marathon, in this, those who are watching this video, you have to join one WhatsApp group. One link is there. If you are already part of that WhatsApp group, I will share the address of the class in the WhatsApp group. You will have the details over there. You can just walk in. We have enough space. Even if 500 students come, there is enough space. Nothing to worry. Okay. Coming to mock test. Mock test, I will just share what I do. This is basically, I personally believe in entrepreneurship. So this is something which me and the students together launched recently, what we call it as DIRA test. This is not a profit venture. Whatever little money is made goes back fully to the students. So basically your seniors are part of it. With the students, whatever little money is made, it goes back to the students as part of their CA final or post qualification articleship. We have different set of students. Of course, I monitor the question paper and correction, everything. I don't leave it. So here we have a mock test. This is basically, you can write it online or offline. You can choose over here. It's same price, 100 rupees per subject. If you're taking both subjects, it's going to be 150 rupees. You can write whenever you want. There is no specific schedule date, 5th June, 7th June, 10th June. Write whenever you want, but we will take exactly 72 hours from the time of you uploading the answer sheet. We will correct and give it back to you with the same feedback, audio feedback, or you will get text feedback and presentation tips. I will also be giving those feedback. So whoever wants can take this up. Like I said, there are so many places where you can write mock test. I'm not saying come to DIRA test and write it over here. Write it somewhere. If you don't have an avenue, you have not found anything, then this is one of the options for you. That's it. But write the mock test. Question paper quality and correction is something I can assure. So these are the two things. If you need marathon, you can come or share with your friends if your friends need. Same with mock test. So this is about the announcement regarding marathon and mock test. All the best for June 24. Keep going, guys. Thank you. Yep. Perfect. Okay, that's it. I'm addressing even recording students. I'll put on YouTube this video maybe tomorrow. Fine. So 3rd June we will lock it for marathon Monday. I just went to check my schedule. 3rd June or 5th June. I said okay, earlier the better, because those who can't come can watch. Recording it will always be available. So that's the idea. I think all of you are already there in that WhatsApp group. So I will share the pamphlet, location, details, everything. Location should be here only. I will just put a poll, how many are coming for marathon. If it's crossing 100, then we will find alternate locations. That's it. Okay. I think up to 200 inge ukarlam. Inge 100, next room 100. They will see live stream. Whoever comes first will sit. Groupless, simply we have 700 students. Active is just 50 to 100. Even that 1 rupee registration, I think 175 students registered overall. That's it. The rest of them will simply come and join the group. They will join all groups. They will keep doing that. That is that. Can't help it. Okay. Now we'll start redemption of debentures. We have 45 minutes. I can't finish the chapter. Very big chapter. Very complicated. But at least I can start and give introduction. Let me download the material. We can go till 7:30. Okay for you guys. Yeah. Sorry? Redemption of debentures, sir. Chanceless. How we will complete? 4 sums, but concepts are big. 2 sums we will finish. 3 and 4. Okay, hi guys. Let's discuss the next chapter in company accounts, redemption of debentures. We are discussing CA Foundation accounts, new syllabus. Another new topic which is added, company's account comes for 25 marks, correct? Issue of shares, all chapters are easy, bonus, redemption of preference shares. If there is one chapter which is challenging for students, not only at foundation level, even at intermediate level, that is my redemption of debentures. Okay, so I will explain every concept that is needed for exam and foundation. I will not go in depth to explain the whole points. We have 4 illustrations totally in your study mat, just 4 sums, but each sum is a different concept. Okay, illustration 1 and illustration 2 are the difficult ones where students struggle, which has in-depth detailed concept. First, let me finish the easy ones for you to get the confidence. We are going to do illustration 3 and 4. Before that, what is debentures? What is debentures, guys? How I have equity shares 100, let's say 10 into 10 or 1000, 100 shares into 10 each. Same way I can have debentures 1000, 100 into 10. But the difference is equity I don't have to repay, debentures I have to repay, and every year I will also pay what? Interest will be paid every year by the company to the debenture holders. Basically, instead of taking loan from one bank, one party, I am taking loan from multiple individuals. Now, I am taking loan from public. That means regulations are going to be very high. So, section 71 of Companies Act talks about debentures with lot of regulations. Understand? If you take Vijay Mallya taking loan from SBI and not repaying 4,000 crores, affected party is only SBI. They will manage. They are such a big bank that if Vijay Mallya doesn't pay also, they will still survive. They will tell, hey, give the money, but of course they will survive. But same 4,000 crores, imagine I take 1 lakh from each of you. It is going to impact you more. That means the regulations in section 71 Companies Act is more strict. So, detailed provisions, we are going to apply those provisions. First, let's understand the entries. Just like redemption of preference shares, debentures also if I am repaying, what is the entry for issue of debentures? Bank account debit to whatever percentage you have to write, let's say 10%, debentures, let's say 100. Debentures also, that percentage represents the amount of interest payable. If it's 12%, now I will pay 12% interest on debentures. If it's 15%, I will pay 15% interest on debentures. Okay. What is the entry for repayment? 10% debentures account debit 100 to bank. Correct? But instead of bank, what I will write? Because I have to first create a liability, then make the payment. So, I will write same like redemption of preference shares to debenture holder 100. My next entry will be debenture holder account debit to bank 100. These are my 2 entries. Correct? If everything is at par, this is the entry. But just like preference shares or equity shares, I have issue, I have redemption. Issue also can be at par, premium, or discount also allowed for debentures. We are not bothered about this part in this chapter because issue of debentures we have a separate chapter, company accounts unit 3. Correct? In the unit 3 you have or no? There you will learn that. Okay. Redemption also can be at par, premium, discount. Okay. What if I am redeeming at premium? Let's say 100 rupees debenture, I am repaying at 120. Same entries, just like redemption of preference shares. Happily, I will pass the same entries. What are the entries, sir? 10%, whatever percentage is given. debenture account debit 100 to debenture holder account 120 because I am repaying them 120. Yeah. So extra 20 what I will debit? Premium on redemption of debentures. So I will write premium on redemption of debenture account debit. Next entry will be debenture holder account debit 120 to bank how much? 120. And last entry will be what, guys? This premium should be transferred to my general reserves, free reserves. Further entry will be reserves and surplus account debit to premium on redemption of debentures. This is if you are redeeming by giving cash, same as preference shares. Here we don't have the concept of CRR. So only 3 entries. Sir, what if instead of debentures redemption, I am giving them shares? Instead of repaying cash, I am giving them shares. So I will write 10% debentures account debit to equity share capital 100. So sometimes debentures have an option to convert to equity shares. Sometimes they will do like this. Half will be given cash, half converted to equity shares. So this entry will be for 50, above entry will be for 50. They will do different ratio. They will tell 1/3 to preference shares, 2/3 to equity, little bit cash again. Like that they will give different combinations. You have to pass the entry. Are you following, guys? These are basic sums. First let's do these basic sums because these are pretty easy. Okay, pretty easy sums. Illustration 3 and 4. What is difficult is only, I'll give you a gist of it in this part 1 video. Debenture, preference shares should be repaid within how many years? Debentures should be repaid within 10 years as per law. Okay. Debenture and bond are not same. They are different. Okay. So I have to repay debentures in 10 years. Now, imagine you, let's say Dilli Babu is saying he wants to get married in Switzerland. That is his dream. Girl, he doesn't care. Any girl is fine for him. But his dream is to get married in Switzerland from his childhood. After seeing some movie, he decided. What you will do, Dilli Babu, for that? What you will do? Destination wedding. What you will do? Save money. First he will save the money. Whenever possible, he will keep saving money. After qualifying, he is getting salary of 2 lakhs. So every month 1 lakh he will keep saving because he wants destination wedding. Correct? Or you will just wait till the day of marriage. Then once the girl is fixed, then you will look for how to find 1 crore. You will start saving. Correct? So same way, anybody who wants to incur, let's say I want to buy a BMW car in 5 years. Suddenly I can't buy, I have to save. Example I'm giving you. Okay. So if company has to repay this much crores of debentures after 10 years, will I tell, hey, let's see after 10 years, or I will save every year? That savings we have to pass some entries. For that only we have something called debenture redemption reserve, where I will save my money and I will invest in something called DRR investment. 2 new terms. I am not telling you the detail. I am just giving you an overview. That only is illustration 1 and 2. Are you following, guys? How to save in these 10 years? There are some provisions because you have to repay to the public. Law is strict. Got it? That is the only complex part. But let me first finish the easy part of the full standard. So at least you get one full confidence. Out of 25 marks, let me get close to 25 marks. Illustration number 3 is basically how many shares I should issue. Okay. Illustration 3, look at this. XYZ has issued 1000 12% convertible debentures of 100 each, redeemable after a period of 5 years. I told you 10 years as per law. I can pay after. That's my wish. So what is the value? 1 lakh. Yeah, 1 lakh is the amount of debentures. Correct, guys? Interest is how much? 12%. Next, according to terms and conditions of issue, these debentures are redeemable at a premium of 5%. That means I will repay into 105%. I am going to pay 1,05,000. The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each at a price of 20 per share. That means every debenture holder had an option to convert 20% of his shares into equity shares, and the balance 80% I will give what, guys? Cash. Okay. Each share I am giving it how much? 20 rupees. That means face value of share is 10. I am issuing share at 20. That means premium is 10 rupees. Okay. Debenture holders amounting to rupees 20,000, nothing but 20%. Correct? Opted to get their debentures converted into equity shares. You are required to calculate the number of shares in cash to be paid for redemption of 20,000 debenture holders. Can you compute, guys? Try it out. How much cash to be paid? How much shares to be given? How many shares? What into what? Can you try to do it? I'll give you 1 minute's time. Try to compute, guys. How much cash I should give? How much shares I have to give? How many shares? Quantity. Try to compute. I will explain in solution. Fairly easy. These kind of sums are easy. At least these we will learn. So first I like to finish what is easy in a chapter. 1 more minute or 2 minutes, then I will start solving, guys. Online, everybody try it out. This is basic maths. Anybody can do this sums. Thirty seconds, I will start solving, guys. Anybody got the answer? Yes. Sorry? 210 shares. Anybody else? Same answer? Okay. Follow. I'll explain with the answer itself. Look at this. Debenture holders who opted for conversion for value of how much? 20,000 out of 1 lakh. Correct? So what I will do? I have 20,000 debentures. Each debenture is worth 100 rupees. That means 200 debenture holders have opted for conversion. Okay. Option for conversion is 20%. Number of debentures to be converted. Now, 20,000 is the value of debentures, not the per unit. Divided by 100. What is 100? Face value. I will find out number of debentures. 200 into 100. So 200 debentures have the option to convert at 20%. In that 20% of 200 is what? 40. These 40 debentures I have to convert into shares. So 40 debentures into 105 per share, 105 per debenture. How much you will get? 4,200 rupees divided by each share I am issuing at how much, guys? 20. Each share face value is 10 with premium 20. So you will get 210 shares. So if you look at this, 210 shares will be given. That's the correct answer if you got it. Then cash to be paid. Out of 200 debentures, if 40 they are taking equity shares, remaining 160 I will give cash. 160 into 105, 16,800. That means we are only dealing with the overall 20% debentures, 20% conversion. We are not doing for everybody. Remaining are yet to decide. So, to summarize this for you, totally I have 1 lakh debentures divided by 100. How many debentures? 1000. In this 1000, only 20% of people decided. Only 200 people decided. So, in this 200, I am splitting as 20% and 80%. In this 20% is 40 I am giving shares, 160 I am giving cash. So, 160 cash is 160 into 105. How much is coming? 16,800. In this 40 people who are taking shares, it is going to be 40 into 105 divided by 20 per share. You get 210 shares. Are you following the workings, guys? I have simplified it for you. Clear? Understanding? Easy? These kind of questions can come for maybe 3 marks or something. Anybody wants me to explain this again? If you want, anybody making note, or can I proceed? Yeah, okay. I have just simplified what is there in the dabba. Your mindset should be, I am working only for the 20% of all debentures. So 20% 20%. Okay. If you are done copying, understood, proceed to illustration 4 and read illustration 4. Recording students also. Those who are copying, please copy it down. If you are not understood, go through, ask doubts. Google Meet or YouTube, you can ask the doubts. Done, guys. Next sum, illustration number 4. Okay. Illustration 4, let's read the question, guys. Balance sheet of B company, unlimited other than AFI something. This I will explain when I go to DRR for illustration 2. Upon I can explain this. They have given equity and liabilities and current liabilities for whatever assets are given. They have given some balance sheet data. Come down, they are given the breakup also. What is the authorized share capital? What is the paid up share capital? How much is reserves they have given? Debentures is 1,20,000. This only is main for me. They have also given freehold property and they are given cash at bank. Come down to adjustments. There are 3 adjustments. Look at this. At the annual general meeting, it was resolved that to give existing shareholders option to purchase 1 10 rupees share for every 15 for at rupees 15 for every 4 shares held prior to bonus distribution. This option was taken up by all shareholders. Sir, this is not redemption of debentures. What is this? What issue? Rights issue. Offer to existing shareholders. We already finished rights, sir. Next, to issue 1 bonus for every 5 shares held. Now, what chapter is this? Bonus issue. To repay debentures at a premium of 3%. What is this? Redemption of debentures. I can also add 4th adjustment. Repay preference shares. So, in one sum, he can ask redemption of preference, redemption of debentures, rights and bonus. Nothing difficult. For rights, how many entries you will pass? Rights, 4 entries, sir. 1 entry. Rights, journal shares allotment, I will pass 1 entry. Bank account 2, equity share capital. For bonus, how many entries? 2 entries. 3 entries over. For redemption of debentures, how many entries? I just now told 3 entries, sir. No CRR. 3 entries. So, rights 1, bonus 2, debentures 3. Totally 6 entries, sum over. If I include redemption of preference shares also, how many entries? 4 more. 10 entries will come. 10 mark question. What is there? 4 separate sums in one sum. You should not get confused. So, I want you to try this sum. Since we have already attended the class, we have learned rights, bonus, debentures together. Do it slowly. I want you to try it. I will give you 5 minutes. First, you pass the entry for rights issue. Second, you pass the 2 entries for bonus. Third, you pass the 3 entries for redemption of debentures. Then I will explain in detail. I want you to get the confidence when you do it. Take 5-10 minutes. Please do it, guys. Nothing new. Mix of all topics. If the exam you should not panic. Okay, I will explain, promise. If you straight want the explanation, fast forward the video by 5 minutes, recording fellows. Others here, solve it. I want you to try it, guys, without looking at the answer. Read and solve. Okay. Please read and solve, guys. I will be right here. Solve it, guys. Okay, how many of you finished, guys? No? Can I start or you need more time? Start explaining. Okay. Follow, guys, those who are watching online also. First they are giving rights issue, correct? Existing number of shares is how much? 20,000. So now they are giving how many for how many shares? 1 for every 4. So 20,000 into 1 by 4. How much? 5,000 shares. They are issuing at what price? 15 rupees. Upon 10 rupees face value, 5 rupees premium. That means 5,000 into 10. 50,000 is my face value. 5,000 into 5. 25,000 is my premium. Total on bank is how much? 75,000. Go down for the entry. Bank account to equity shareholders 75,000. Equity shareholders to equity share capital 50. Premium 25. This you understood? I can pass one combined entry also. Bank account debit to equity share capital to securities premium 75,000, 50, 25. Are you following, guys? So I got a premium of 25,000. Keep this in mind. This part clear? Now how many shares I totally have? I had 20,000. Now I issued 5,000. So overall now I have 25,000 shares. This is my revised shares. Now if you see, to give one bonus for every 5 held, this is given after rights issue. So 25,000 into 1 by 5. How many bonus shares? 5,000 into per share 10 rupees. So my bonus value is 50,000. Which is the amount into 15. 15 rupees is the issue price including premium. Bonus will always be given at face value. Bonus always at face value. So 50,000 rupees. Look at the entry for bonus. Securities premium we just now created in the previous entry. Questionnaire, do you have SP? No. Questionnaire you have only PNL. I taught you in the previous class, for bonus we can use CRR, SP and free reserves. But first you should use what? Securities CRR. If CRR is not there, securities premium. So my entry is securities premium. Irukra already SPA use panni. SP account debit 25, PNL account debit 25, 2 bonus to shareholders 50, bonus to shareholders to equity share capital 50. Entries I am sure you all know. Computation. Understood how 50 came? Basically it's 25,000 shares after rights into 1 by 5. 5,000 into 10 per share. So first to finish the securities premium, then go for balance. Clear, guys? Now we are going for repaying debentures at a premium of 3%. Go to question. Debentures is how much? 1,20,000. What is 3%? 3,600. So what is the same 3 entries we will pass, guys? Look at this. Okay. Ignore these 2 entries. This I am yet to teach you. So these 2 entries, of course, you will not understand, because I told you there is something called DRR reserve, DRR investment. That will come. Once I teach you that, you will understand these 2 entries. Do the remaining redemption entries. Redemption entry, 12% debentures account debit, 1,20,000. Premium payable on redemption, 3,600. 2 debenture holders, how much? 1,23,600. Then payment will be here. Debenture holders to bank, 1,23,600. Transfer of premium sonna. PNL account debit to premium on redemption 3,600. Are you following, guys? Hello? Clear? These 2 entries I cannot explain now. This one, debenture redemption reserve, debenture redemption investment. So this entry 1, 2, these 2, 3 and 4 might look scary, but it's an what to say. I need to spend 30 minutes to explain the concept. Once you know the concept, rest is easy. Are you following, guys? So in this part, we have just understood the basics of debentures chapter. We are done with illustration 3 and 4. Illustration 1 and 2 only are the main sums. If debentures chapter is difficult, it's because of that, where you have to learn about something called debenture redemption reserve. You have to learn about something called DRR investment. entries for that, and you should also learn about something called X interest on debentures and cum interest on debentures, and how to account for X interest and cum interest. That is illustration 1. This is illustration 2. Once you learn this, these 4 entries also you will easily understand. Okay. You can mug up these things, but you will feel like why you are doing it. Once you know the concept, this part becomes very easy. Are you following, guys? This separate explanation of DRR and X interest, cum interest, we will do it in part 2. Separate video for that, 1 to 1.5 hours. We can finish those 2 sums. With that, today we will close debentures. Thank you, guys. See you all in the next session. Yeah, fine. We have 8 minutes left, but we'll close. We'll resume tomorrow. Yeah, I'll take the doubts. I'll see the answers now. Just give me 2 minutes. Tomorrow alone. Okay. Mostly we'll do it tomorrow, but if I'm not able to do it, that's it. Thank you, guys.